Hello and welcome back. Hope you're good, doing well. So I hope that you are having sound. Sound is all right, and you can hear me. So we are having a weekly market outlook after a long time, and hopefully we're gonna get that weekly market outlook every Sunday as usuals. Okay, so let's move on. Let's go ahead and look at the setup for this week. So, but before going to look at that, if anyone want to join us looking for trading or trade setup, just simply head to the Wave Trader wave-trader.com. All right, and check the membership levels over there, or you can fill that form and send that form to me for further information. All right, so now let's look at the video setups which I have already posted over there on YouTube, and if you have gone through, then good. If not, then try spare some time and look at them. So we are expecting oil, still we are expecting oil to draw for a daily wave, to the downside. Okay, so and euro dollar to bounce back higher and DXY to break down. So we are having a couple of updates on euro dollars, and we are expecting New Zealand dollar to bounce back from the bottom, from the lows. The reason is very much simple. Why New Zealand dollar and Australian dollar getting weaker is that the inflation or the Chinese economy is not doing really well, all right? So activities have dropped significantly in the China. China is just simply fighting with the disinflation, which is causing the Australian dollar and the New Zealand dollar to get weaker with the Chinese yuan. Yeah, so that's causing the divergence we are having right now. Divergence between the Australian dollar, New Zealand dollar, euro dollar, and pound dollar. So euro dollar and pound dollar both are stronger against the dollar. Okay, but the Australian dollar and the New Zealand dollar, they are not stronger against the greenback. All right. So the reason is very much simple, and the reason is that the China is slowing down significantly, sharply, and people bank of China, they are struggling to push the economy. The market is expecting that China gonna bring a huge stimulus package for the market, and they are doing, right? They have dropped 50% tax on stock, on stock, um, just now. All right, so news just broke out a couple of hours ago. So they are trying whatever they can to push the economic activities higher. So that's causing the New Zealand dollar and Australian dollar to drop, right? Because both economies rely on the China, and China is not doing well. So slowly we're gonna see that the Chinese side effects gonna spread all over the world. Okay, so you are looking, you are simply selling the euro dollar from the highs and looking to buy the Australian dollar from the lows. So I will explain that how you can do that. But right now we are expecting another leg higher on the euro, and euro test the top, and then you are looking euro to draw from the top. So I will explain that. So natural gas is a Nasdaq 100 index. Yes, Nasdaq 100 index is also setting up for a daily breakup, daily wave, daily breakout for upside. So I will explain that what you are looking over there too. So the natural gas is a simple buy, easy setup. So natural gas is setting up easy trade setups, easy buy opportunities. So if you are following the natural gas opportunity, hopefully you have caught that trade a couple of times. But when you are buying the natural gas, just make sure you understand that margin requirements may be higher on the natural gas, and you may have to hold your trade for longer to be profitable. But yes, natural gas is again at the lows, at the multi-years lows. If you remember, when we were buying the natural gas back in 2020, right, when we have a crash on oil, natural gas was offering a best buy opportunity at that time. All right, we haven't seen huge spike on natural gas, but we have seen spike on European gas. All right, so EU Japanese gas, all right? Because reason is very much simple, guys. You know that the Europe stopped buying gas from the Russia, which caused that prices to go higher. But we haven't seen similar situation in the USA, but we have seen still strength on the natural gas. So in short, we are in a similar story again on the natural gas. So natural gas again is at the same area, same place where it was back in 2020, and same story. Yeah, so Europe is going again. Winter is coming, and Europe is not getting a supply from the Russia, and Europe has already replaced its natural gas supply from Russia to other countries like Qatar and USA. So getting gas from other countries. So still going to be a longer term buy opportunity on natural gas, but we are not going to see similar kind of spike which we have seen already, after the Ukraine war. We are not going to see that. So CAD yen, we were expecting CAD yen to drop, all right, and the CAD yen dropped, but did not continue for big time to the downside. So we'll explain that what we are looking on the CAD yen to, and policy divergence is at policy divergence is peaked right now. So Bitcoin also going to be a buy opportunity, all right? So we'll explain that. Again, Nasdaq, so pound was a buy opportunity. We got a couple of short-term buy opportunities in pound, but we haven't got a daily breakup to the upside. So dollar CAD did well. Dollar CAD, the only chart did well, and that's the dollar CAD. We can say that right now, all right? The reason is very much simple, because dollar is gaining, yeah. Dollar is gaining, and dollar CAD chart did well. So CAD yen again. So we're gonna look at the CAD yen. CAD yen did well. So pound dollar again update. Right, so we are still tracking these charts. These charts are still offering some good setups, right? So dollar yen, we're gonna look at the dollar yen too. Yeah, we were expecting dollar yen to break down after policy change from Bank of Japan. It did break to the downside, but did not continue for a big time to the downside. But again, there was a chance to test the 146 area. So it tested 146 areas. So we will talk about the dollar yen as well. Again, euro dollar did well, from the top. Right, so these were the opportunities we were having. So we are still tracking these opportunities. These opportunities are still there. So we are having some charts on the trading view as well. So this is Bitcoin, right? So we were expecting Bitcoin to break and continue to keep pushing more higher for next leg. So hopefully you see that. If you see. So I'm having I hope that the YouTube, is okay. So do you see everything is all right on YouTube, guys? Just let me know, please. The stream is okay. All right, so it's fine. Then thank you. I'm getting a error message from the YouTube. It says that the resolution is too high. So if you are fine, then it's okay. Then we're gonna go ahead. All right, so let's move on to the Bitcoin. Okay, so Bitcoin, we were expecting Bitcoin so maybe you're not gonna see my drawing on the trading view, guys. So I'm using a pen. Yes, I'm using this pen. Maybe you're not gonna see that drawing. So when I will look at the charts, I will use a different pen. I will try to use that different pen over there. So we were expecting it to go higher, Bitcoin. Yes, we got some short-term opportunities over there on lower time frame within these areas when we were tracking that breakout. And then we were expecting here at from 31K to drag lower back to these areas within those video updates. So we were expecting Bitcoin to drag for another leg lower within these charts. We're gonna watch those charts and then you're gonna get the idea that. So it went lower, but this time it broke out. All right, so this time it broke out this area, this place, this previous low, and heading back to the bigger daily formation, which I was saying in my previous video analysis, that we still can see that the drop on the Bitcoin. So Bitcoin is still going to be a a longer term buy opportunity, but longer term buy opportunity is not going to change on the Bitcoin, and I will explain that why we are not expecting Bitcoin buy opportunity to change. All right. So the big reason is that right now there is a policy divergence, okay, between the China and the West. What West is doing, central banks are doing in the West, they are bringing down the inflation. They are raising the interest rate. Yeah, so almost peaked interest rate. Hiking cycle is peaked in the West, and from there we're going to see interest rate cut. Interest rate going to start coming down, and at the same time China is facing disinflation. All right. So what China needs to do, China needs to ease its monetary policy. Yeah, cut more interest rate, and bring a stimulus package. Simply print more money. All right. So what China needs to do, print more money. Yeah, and that money needs to come into the market, and stock should push higher. Okay, so that's in China right now. In China is a perfect story for the crypto to rise for longer term, but this is not the story right now in the West. Okay, so when rates start to come down in the West, this is going to be a perfect longer term buy. Bullish opportunity, a bullish story for the Bitcoin for longer term. Right, so hope that makes sense. So every time when we're going to see that the Bitcoin is dipping or testing the previous lows, it's going to be a longer term buy opportunity. Is there a possibility that the Bitcoin still can test the 16,000 or 15,000? Yeah, we cannot rule out that. We still can see the Bitcoin to visit the 2023 lows again. So we cannot rule out that. Bitcoin gonna be a bullish opportunity for longer term. So we're expecting dollar yen to drop from that top. So the reason why we're expecting dollar yen to drop from that top, again, right now we are having policy divergence between the Bank of Japan and the Fed. Fed is still looking to raise the interest rate for another time. So there is a big, big rate gaps between the Bank of Japan and the Fed. So rates are extremely high in the USA, but rates are extremely low in the Japan, which is causing the dollar yen to stay elevated for the upside. But what is the other side, which we are watching very, very closely? And the other side is that the Ministry of Finance, right, in Japan, they are not happy with the weaker currency. The higher the currency goes, it's creating panic for them, and they are having political pressure from their public. And that's causing them to intervene into the market and sell the dollar and push the yen higher. All right. So right now we are not having any, since last couple of weeks, we are not having any comment from the Ministry of Finance. Previously they said that they are watching the dollar yen very, very closely at 145 and 46 areas, and if they're going to see that the dollar is still going to push more higher from those areas, they may intervene in the exchange rate. All right. So that's the reason we are not having huge strength on the dollar yen, and whenever dollar yen is coming close to the 146 areas, it's struggling. And also the other thing is that the Japanese, the Chinese are also not happy with their weaker currency. They are also intervening in the market. They are, China is simply facing a very complex situation right now. Weaker currency and disinflation. So you only can get out from disinflation by having a weaker currency. Yeah. So at the same time, they're trying to not let their currency fall very, very aggressively, and trying to intervene, trying to sell the dollar, trying to push the yuan higher. All right. So also weaker yuan is not going to be good for them. They may, their default rates simply can go higher. Especially those businesses going to be out of business which have issued dollar denominated bonds. They already some property businesses, they are filling up for the bankruptcies. So they are trying to create, make a balance between them. So not let the currency to get weaker, but not, at that level where there are going to be a lot of problem for them. So China is right, is in a complex story. So we may have intervention from China, right? They can intervene. They can, sell dollars to push the yuan higher, and at the same time, we may have, intervention from the Bank of, Ministry of Finance or Bank of Japan. They can intervene into the market, which can cause the dollar to go down, right? And also the other thing is that the mortgage rates are going extremely high in the US and the other European countries, which can significantly slow down the housing market in the West. All right, and people can feel the pressure in the West. So they may also give a green light to the other central banks like the Swiss National Bank, the Bank of Japan, and the People's Bank of Canada to intervene into the market to bring down the yields, right, at lower levels. So right now, higher yields are perfect for the Fed to bring down the inflation. So the higher the yield goes, going to be a perfect story for the Fed. So they want higher yields to bring down the inflation. So right now, Asian countries are not doing well simply. So this is the story behind the dollar yen. All right, this is a story which you need to keep in your mind, that Swiss National Bank, People's Bank of Canada, and the Bank of Japan, they can intervene into the market. So if they are going to intervene into the market at the same time, we may see aggressive sell-off on these currencies, on dollar yen to the downside, like we have seen back in October, right? So we are there where we were back in October. Back in October, mortgage rates were extremely high, yields were higher, and we have seen intervention. Right, we have seen intervention from the Bank of Japan and Ministry of Finance. They sold $62 billion, to fix the exchange rate. And at similar time, we have seen intervention from China. They sold dollar to push their currency, and we have seen intervention from Swiss National Bank. So we are there again at intervention level. So that's why buyers are struggling to push prices higher on the dollar yen. So you are watching them closely. If you see that any news is just breaking out, or any strong sell-off is just coming out on these currencies, then you are bang, getting in. So I will show you the example. So there we can see that, okay, within these areas, so where we have seen intervention back in October. So it's not loading. Let's look at this. So there we have seen intervention. Okay, so this is the first one. The first intervention happened here at this area. They sold dollar, but that didn't help. That didn't set the trend. Then again, they sold aggressively there within these areas, and since then we have seen a downtrend. And then again, verbal intervention happened here at this area. Ministry of Finance said that they're going to intervene, and we have seen significant sell-off over there. So again, we have seen some comment over there and some intervention from the People's Bank of China. They sold dollars, right? They were selling since last 2 weeks. They are intervening in the exchange rate. So we got some strength on the dollar against the Chinese yuan, which caused that move. So right now it looks like that it's a nice bullish flag for breakup. Okay, it looks like this, another leg higher. So it can happen, all right? So it still can push higher for another leg higher, but we shouldn't forget that these areas, okay, these are intervention areas, intervention places where we can see intervention from the central bank. So you are so you should trade into that direction where the central banks want their currencies to go, rather than again going against them. They got lots of reserves. They can use those reserves and they can change the direction of the market. Okay, right now, all right, so right now the trend is not, okay, this is not the trend. The trend is this. Okay, we are having trend for upside. The market forces are forcing the dollar yen to push more higher. Okay, so continue to keep pushing more higher. Market forces are going there. We can see over there. These are the market forces. Okay, and this is simply caused by the policy divergence. Okay, not this one. So we do have the there. Okay, I have seen that. I have shown that chart a couple of times ago as well, guys, if you remember that. So we gotta even I was expecting that kind of policy divergence between the Fed and the Bank of Japan. So this is the story behind that, selling the dollar against the yen, okay, because we are having interventions. So every time when they are going there, you're looking for them to go higher. Okay, so this is the pound. We are still expecting another leg higher on the pound. Okay, we're still expecting, so we may not see another leg higher, guys. Okay, so we need to understand this, the logic behind why we're expecting another leg higher and why we may not see that leg higher, and dollar still can start continue to keep falling, pound can start continue to keep falling to the downside. So this the logic is very much simple. We are having higher inflation in the UK. Inflation is still, let's look at the inflation quickly. Right, so we are having higher inflation in the UK, and what Bank of England is doing right now, they are fighting with the higher inflation and still saying that they're going to raise the interest rate. That's the core inflation. All right, so the core inflation is 6.9. We can see over there. So 6.9 means that still need stronger pound. Bank of England needs still stronger pound to push inflation lower. So this is the headline inflation. So 6.8. okay, means that Bank of England has to be more hawkish to bring down these numbers to the downside. Rates has to go higher. Okay, rate has to go more higher for inflation to come down. For rates has to go higher, Bank of England has to be more hawkish, all right, towards the market. So the only exception is that if inflation is going to fall very, very aggressively to the downside, like we are having in China. Okay, let's look at the Chinese inflation first to understand the story. This is the Chinese inflation. All right, so Chinese inflation dropped, went below zero. Right, so China is simply fighting with the disinflation. So if inflation is going to fall very, very aggressively in the UK, then Bank of England can turn rather than turn, they can be neutral. They can say that rates are at enough level. All right, so right now the interest rate is somewhere close to the there is interest rate. It's 5.25. That's the interest rate in the UK, but inflation is still significantly higher, above the 2% target. So this is the story behind the pound strength. Okay, that's why we are looking for pound to stay elevated for the upside, give us another leg higher. All right, and that's causing pound to just keep rising against the Australian dollar. Okay, now you can get the idea that why pound is rising against the Australian dollar. Okay, because there is a policy divergence. So inflation is Australian economy and New Zealand economy both are struggling. And what's the reason? Because of the China, they are struggling. And on the other side, inflation is extremely high in the UK, all right? And Bank of England is still hawkish. They are saying that rates can go higher and even can stay higher for longer. All right, and that's causing the policy divergence between the Australia and UK, and causing the pound to stay elevated for the upside against the Australian dollar and the New Zealand dollar. So let me go and look at those charts, and there is still a risk for those currencies to just keep pushing more higher. All right, there we can see that they are pushing higher, and we were expecting these to rise within these areas. If you guys remember that, we were expecting pound to go higher within these areas, so rise, reverse or longer term there, if you remember that, and we were expecting buy opportunities within these areas. So if I'm gonna remove these and gonna, all right, and that's what we have seen. Okay, that's what we have seen back in 2013, and then again in 2017 to 2020, and then again 23 to 20. So basically policy divergence is just happening over there, and which is causing the pound to just stay elevated for upside. So they're going to be buy the short term, buy the dip opportunities on pound Australian, pound Australian dollar, and pound New Zealand dollar for short term buy opportunities. So we'll talk about that too. So hopefully you understand the story behind that, why we're expecting pound to go higher for another leg higher, and short term one more push up, right? Because the Bank of England is still extremely hawkish. Okay, and inflation is very high. There you can see the policy, the Australian dollar is struggling. So the only exception for the pound to fall very, very aggressively to the downside and goes there where the Australian dollar is going against the US dollar is if the inflation, if the UK economy is going to slow down very, very aggressively, then we're gonna see that the pound gonna stay elevated to the downside. Okay, and this is possible. Okay, I mean you cannot say that pound cannot fall for another leg lower to the downside. This is possible. It depends how the UK economy is going to perform. So we'll talk about that. But right now, as I said, we're expecting another leg higher, and every time when you see that the pound is going over there on lower time frame, you're looking for bounce off and short-term buy opportunity within these areas. And if a breakout comes, then you're looking that move, and from that top you're expecting it to fall back within that channel and continue to the downside. So updated chart going to be over there. Okay, this is, so we got some bounce off on the pound from those lows, but that didn't continue. All right, so there we can see that some aggressive move came over there, but I didn't broke out. So we got these short-term trades as well, short-term from within those lows. So you can go there and can watch those pound short-term pound opportunities I will have explained over there. So again, same, you are looking for a short-term bounce back from the current price. Let me remove those, because you're looking for this short-term bounce off. Okay, and this trade, and if it goes aggressively higher, then you're looking to go all the way back to that top. And if you don't see that, all right, so if you don't see that a bounce off, all right now you are expecting price to hold within these areas and stay above within those areas and bounce back. So if we don't see, all right, and price keep falling, still we're gonna expect it to bounce back, all right? So at least correct like that. If it is going to continue to keep pushing more lower, okay, at least correct that. So still gonna be a counter trend bullish trade, all right, counter trend for upside, even if it keeps dragging lower. But yes, as I have explained, guys, so if UK economy is going to be to slow down extremely sharply like we have seen in China, then there is a possibility that this channel, all right, then this channel can break down. It depends how aggressively the inflation is going to be. Let me pull out the Australian dollar chart, and so New Zealand dollar chart and Australian dollar chart both tells the risk sentiment, what kind of risk sentiment we are having in the market. Okay, so we cannot rule out that. There we can see, right, so we can see that the Australian dollar has removed all its gains. All right, so we have seen 17th of October, yeah, and 26th of September, similar bullish rally, and then Australian dollar started to give its gain back, and Australian dollar has given 78% of its gain back to the market of this rally, right, and caused by Chinese economy. So this move still can happen, all right, this move still can happen, and it's gonna it's going to depend how aggressively the UK inflation is going to fall. If UK inflation is going to fall very, very aggressively, then Bank of England can say that we have done enough, we are not going to raise the interest rate because the economy is slowing down sharply, right, and holding rates or maybe cutting rates. So we are still far away from cutting rates, but yes, we cannot rule out that leg lower, all right. So this situation which is Australian economy is facing, UK economy can start facing that too. So that's why when you are buying the pound for upside, make sure you are well protected with the stop loss, right? You are also giving enough room to your trade, not using too tight stop loss, and looking for it to go higher. And once you see that the breakup is coming, then you are looking it to go higher. Let me pull out bar pattern. All right, so this something like that kind of move we are expecting. All right, like that kind of move we are expecting. Hope that makes sense. So similar trade we're expecting on the euro dollar. All right, so similar trade, euro dollar chart. I don't think so. I need to similar trade going to be on dollar index. All right, so similar, we just need to invert that chart. All right, so dollar index chart needs to be inverted. So same setup, same structure, everything going to be same on the dollar index. We just need to invert that chart. Okay, look at that. It's doing similar way like pound is doing, and the logic behind is same. Right, so the logic is similar. The logic. Why DXY is not there? Okay, if I'm gonna again pull out the Australian dollar chart on my right side, and gonna pull out some fib lines, right? And if I'm gonna pull out fib lines on DXY too, so why we are not having the DXY at 78% retracement of this rally, all right, where the Australian dollar is right now. Okay, so the reason is very much simple. There is a high percentage of euro and pound in the DXY, in that index, in that DXY. All right, and what's happening in the Europe? Higher inflation, and ECB is still hawkish. They're still looking to raise the interest rate for another time, and still facing higher inflation. And similar stories there in the UK. All right, and story is very much similar in the Australia and New Zealand. Okay, inflation is still higher in those two countries, but the problem is that both economies are relying on the China, and China is slowing down extremely sharply, and that's causing the Australian dollar and New Zealand dollar to stay weaker rather than being stronger like the euro and the pound. All right, so that's why we are not having similar kind of strength on the DXY or the euro or the pound, similar kind of weaknesses on the euro and pound like we are having on the Australian dollar and the New Zealand dollar. And DXY is reflecting that percentage, the euro, the higher portion of the euro and pound. That's why DXY is not there where the Australian dollar and New Zealand dollar is. Okay, hope that makes sense and you got something new to learn today. All right, so the setup is very much simple. So once you're going to see that the pound is going to rise or euro is going to break up for another leg higher, you're going to see that the DXY is going to break down to the downside for another leg lower. So if I'm going to go there, okay, I'm going to look at this chart. We were expecting DXY to continue to keep dragging lower. So we got a nice leg lower, right? And from there, from these lows, we're expecting it to reverse, go back up within that channel. Okay, since June or since July we are having that lag. All right, so DXY is still rising, and the reason you guys know that the Fed is still looking to raise the interest rate, causing the DXY to continue to keep pushing more higher. Yeah, so that rally is still happening over there on the DXY, but we are expecting that this leg to finish its move and start falling for another leg and test these lows. So once you're going to have that trade, that wave going to be on the pound, that wave going to be on the euro dollar, and we're going to have bounce off from the Australian dollar, New Zealand dollar, all those charts, and maybe a bigger sharp sell off on the dollar in dollar yen, all right, and lag lower on the dollar CAD. So hopefully you understand that the setups which I have posted over there on this setup is similar. Okay, same. This setup is same. This setup is same. You can multiply your risk if you're gonna if you will take all these trades at the same time, you're gonna simply multiply your risk, right? Or you're gonna buy the pound, or you're gonna buy the pound. These waves are, trades are simple. Or if you're gonna sell the dollar against the yen, so these trades are same, same trades. So yes, there we are expecting the dollar to fall against the CAD. Okay, and the updated chart so nicely went higher. So the dollar can nicely went higher from these lows. So I'm gonna look at the updated chart. The updated chart, we're expecting dollar CAD to start falling from the top. So we're going to talk about that, how you are looking to trade on the dollar CAD. You are every time when the dollar CAD is testing the highs, you are looking for this to remember the longer term picture on the dollar CAD is still bullish. So we are still looking dollar CAD to continue to keep rising. right? And continue to keep going higher all the way up to 148 areas. Okay, we are not having any change. Remember this flag when price was there, and I was saying within dollar CAD analysis, you are looking dollar CAD to continue to keep rising. That flag within these, yeah, if you're gonna look at that, dollar CAD analysis, you're gonna get the idea. So we're expecting this flag to rise from these lows. So we're still expecting dollar CAD to continue to keep rising all the way back to that high. Okay? This weekly analysis is not going to change, right? This weekly analysis is not going to change, and the reason behind is simple: the fundamentals. All right, so fundamentals are saying that still longer term bullish on the dollar against the CAD. Right, so fundamentals. Oh, let's quickly look at that. Right, so let me pull out what are the fundamentals which are suggesting that still longer term bullish on the dollar CAD. Let's quickly look at that. Okay, so if I'm gonna go side by side, and we'll look at that. I just need to open a couple of chart. So if we're gonna use, I'm gonna go down and we're gonna use the inflation on both charts. All right, so we need to look at the I'm gonna use the headline inflation. That's the Canadian. That's the, no, that's not the inflation. That's the inflation is here. That's the Canadian inflation, and that's the US inflation. All right, so if we're gonna look at this inflation, so inflation, right now is almost the same, 330, 3.3 in the Canada and 3.2 in the US. But right now we are expecting that the inflation in the Canada gonna fall faster than the inflation in the United States, right? And there is a very good chance that let me pull out the rates on them. Okay, so IR inflation rate, INTR. So CAINTR. Okay, that's the Canadian interest rate. And if I'm gonna pull out the USINTR, that's the Canadian interest rate. So it shouldn't be symbols, sir. So we should add that. Okay, so there we can see that. So we're expecting right now that the inflation gonna fall faster in the Canada rather than the US, right? And Canada and Bank of Canada gonna change its policy, gonna reverse its policy faster than the USA. All right, that's the logic behind that. And whenever we see that, whenever we see that the growth is slowing down, usually we see a weaker growth in these countries first, like Australia, New Zealand, Canada, or I mean, US is the last to fall. Okay, US is the last to fall into the recession or slower growth environment. And if I'm gonna let's look at the PPI, what PPI is saying right now. So that's the Canada PPI. All right, I have removed the interest rates. So that's the Canada PPI. So Canada PPI went negative faster than the US PPI. Now I'm gonna open the US PPI. So US PPI There is the US PPI. Okay, so that's the United States PPI, and that's the Canada PPI. So US PPI, hasn't turned negative yet, while the Canadian PPI even turned negative, went at negative 5.8, while the US PPI went up to 0.22. So this is actually telling us that the inflation is slowing down faster, right? This is telling us that the headline inflation is going to slow down faster than the US, right? The headline inflation, the chart which I have previously shown you, this chart is telling us that that's going to fall. I mean, Canadian economy is going to slow down faster than the US, and that's telling us that stay longer term bullish on the dollar CAD. You don't need to be, turn start selling the dollar CAD. So that's why this chart is playing out really well. Okay. The US was late. The Fed was late to start raising interest rate, and that caused the dollar to go higher. Bank of Canada was quicker. They raised the interest rate faster than the Fed, and that caused this wave. And when Fed started raising interest rate, that caused that wave. Okay. Now, why we're expecting dollar to stay elevated for more upside? Again, Bank of Canada will cut interest rate faster than the Fed, and that may give us a spike like that. Okay, like that kind of spike. We can see the spike we have seen back in 2016 and back in 2020. All right, so are we going to expect that spike right now? We are not expecting that spike right now. Okay, that spike gonna happen then when policy reversal gonna be over there in Canada. Then we're gonna have that spike up to the upside. So what you are looking actually right now, just dollar CAD to stay sideways, right? Hope that you understand that how to trade on the dollar CAD. Right, so you are simply looking to counter it from the top and stay sideways within this sideways market. Right, I don't think so. Dollar CAD gonna go that much far away again. 138, and when it comes to fall back within these areas, you are looking it to go back up from 130, right? 130, 131 to go back up. And when it comes close to these areas, right now it is running at 136. So I will talk about that, how you can trade right now at the current price. So when it comes to 130, then again longer temperature going to be bearish. So what you are looking right now, you are simply looking to counter this. All right, so looking to counter that. So if you remember these charts on this area, so I think I haven't updated yes, these are the charts. Okay, when dollar CAD was sitting over there, when it was there at these areas, let me open that chart again. So when dollar CAD was sitting over there at 131, so there 131 area, so we were expecting short term on lower time frame to break up. Okay, we were expecting it to break up and continue. We haven't seen that breakout on dollar CAD, and dollar CAD went lower for another leg, and there we were expecting, right? And we were expecting, we have seen breakout, yeah, but we didn't see continuation. Yeah, we haven't seen breakout there. Sorry, so we haven't seen, and we have seen breakout and then again fall all the way back to this area, that low, right there where we were expecting it to hold these areas. So we haven't seen any price action at these areas. We were expecting some price action. We haven't seen any price action. We were expecting some indicators to give us some price action over there and buy opportunity, but all those indicators and the rest of the market was hinting that it is not going to hold at this area and going to fall all the way back to this area. So we saw drop. We saw drop, and then again price form new low. I think broke below 130. Yeah, not broken below 130, just held those lows and started to price, form a nice price section over there and started to build up the move over there in this area. So these are the lower time frames, 1 hour time frames, where the price action was happening for the weekly wave, which we are having right now. So similarly, So the point here is that similarly you are watching price action on dollar CAD at the highs, okay, within that wedge, the wedge which is just building over there. Okay, every time when price goes higher from higher high within that wedge, you are paying attention there, okay, and looking for short-term trade first within these areas. And if it breaks down, you are holding it. If not breaking down, getting out from that trade and letting the dollar CAD test the high again. Right? So remember that when you are selling the dollar, you are going against the trend. Okay? And the trend, I have explained to you what trend is there. Okay, the trend is that the Bank of Canada are going to cut the interest rate faster than the Fed. Okay, and we may see spike for upside. So make sure when you're selling the dollar CAD, keep that spike scenario in your mind. All right, so you still can see that the dollar CAD still keep, you know, slightly pushing higher back to the 138 areas or 138 areas. All right, so 136.40 is already tested. So make sure you understand that. Okay, that's why you are looking. So you're paying attention and looking for short-term counter trend trade first, right, within these areas. And if it falls aggressively, okay, by some intervention from the other central banks, as I have told you, intervention may happen that can cause the dollar to go down sharply. If so, then looking to go all the way back to there. If not, then another leg higher. So you can see that the price is holding those moving averages nicely on these 1 hour to 2 hour time frame. Whenever you see that the price is coming within these areas, okay, you're looking price to break down. If it doesn't break down, then get out. You are countering the trend. Don't stay into the trade from you're countering the trend, okay, when you are looking to sell it from those highs, yeah, and the price is coming within these moving averages. You're looking sharp breakdown. So if sharp breakdown comes, then bang, and you're staying in. If sharp breakdown is not coming, price is holding again this trend, right, then another leg higher. Okay, and again from this previous high or new high, you're watching price action and looking for this to again repeat the same price action. Make sure your stop loss is well placed over there. Depends on you are using a 20 pip stop loss, 30 pip stop loss, or 40 or 50, whatever, right? But make sure whenever you are selling the dollar against the CAD, you are using stop loss over there, because there is a risk for sharp breakup, sharp spike up for the upside. Okay, if you're not going to use stop loss and going to get into the trade with a stop loss and spike happens, you're going to wipe out. Okay, also risk accordingly. Risk, reasonable. Don't put all your risk on one trade. All right. So that's how you are looking to trade on the dollar CAD. Right. So yeah, that's dollar CAD. So similar strategy you are using actually on these charts. Okay, on the DXY, on the pound, on the euro, all right, or on the dollar yen. Similar situation, strategy, or similar strategy on the New Zealand dollar, US dollar, okay, or Australian dollar. So these dollar charts are actually doing the same thing. Okay, we were expecting dollar shift to bounce back, right? It went lower sharply and then started to go back and started to rise. So it has almost done that wave. It has almost done this move, right? So we still may see another leg lower within the dollar chief chart. Okay, so the strategy is very much same on all these charts. So these were the charts I have posted just recently on a trading view. So euro dollar, same strategy. We'll look at that on lower time frame, what to do on euro dollar. Same strategy you are using for buying the New Zealand dollar. Actually you are countering the dollar. Let's look at the dollar. Why dollar is getting stronger and why we're expecting dollar to fall for longer term. Let's look at this first, okay, and then we're going to talk about how you can trade on these charts on lower time frame. Let's just try to understand the logic behind that. Why dollar has gained, why why we have seen this rally on the dollar, okay, why the DXY went higher from the lows. Let's look at the logic behind that. What has caused that dollar to go higher? Okay, so for that, I'm simply gonna use two charts. Again, gonna be the inflation, all right? So I'm gonna use, first of all, I'm gonna use the uh, so US PPI is also important to understand that. So I'm gonna use the US inflation first. All right, so let's just put everything on this PPI chart to understand that. Okay, so this is the PPI chart. So you need to keep, this is a bigger picture. So the chart which I'm going to pull out, this is a bigger picture, and this bigger picture is not going to change anytime soon. So I'm gonna use the US inflation, US inflation chart on it. Let me just look at this symbol. So symbol gonna be the US IRYY inflation rate, US IRYY. So US inflation rate, yearly based, and then I'm gonna put core inflation on top of that, core inflation chart. So they're gonna be US core IR. This is the core inflation rate, all right? So which is stuck at 4.70. So I'm gonna pull US INTR now, interest rate. This is actually the policy of the US, the Fed. Okay, this is this chart is telling us that what is going to happen next. Okay, what Fed is going to do next in coming months and or coming years, maybe 1 to 2 years, what Fed is going to do. So the red is the PPI chart. This is telling us that what is going to happen with the headline inflation. Okay, so this is the headline inflation chart, and this is the core inflation chart, and this is the interest rate. Okay, so what happened first there? We need to look at this box first. Okay, we need to look at this box first. Now this box is telling us that Fed printed a lot of money. Money supply went up so aggressively higher. Okay, we can pull out the M2 on it. M2 money supply. This chart, so we can even look at this. Okay, so the first thing which came in is the money supply, right? So Fed started to print a lot of money, and that money, so let me use this one, this brush. So Fed printed a lot of money because during the COVID-19 economic activities stopped. They printed a lot of money to run the economic activities. They printed a lot of money. All right, that money brought inflation. Simply, we got the PPI inflation started to rise, and after that headline, the yellow line, that started to rise, and then again after a long time, after a couple of months, we saw that the core CPI started to rise. Okay, so headline inflation and there we can see that the headline inflation was at this area, all right, while the core inflation was still close to the bottom. So the core inflation took some time to rise, sometimes to start rising, right? So PPI was keep rising, headline inflation was keep rising, and both found top over there. And then we can see that the core inflation, found its top over there, and the PPI started to fall. PPI is leading us, telling us that what is going to happen with the headline inflation and what is going to happen with the core inflation. Right? And then, core inflation, the headline inflation started to fall, fall after the PPI, and then, core inflation is also going down. So what we should expect, okay, now there is the point. Just look at, this is the cycle, okay? Core inflation, PPI, headline core, they went higher significantly. Then Fed started to raise the interest rate. There you can see this light yellow line. Right? So similar story is going to be there again. Headline, PPI down, headline is down, core is also falling. Fed gonna hold rates higher. That's what they're saying. They're gonna hold the rates higher for longer. Okay, that's what Paul said at Jackson Hole meeting. They're not gonna cut the interest rate. They're gonna hold the interest rate higher for longer. Okay, higher for longer. So right now, what market is trying to understand, trying to see through the words. Game market is trying to see through the Powell words is that how long Fed gonna hold the interest rates higher at this area before start cutting the rates. Okay, similarly, if I'm gonna remove all these drawings, similarly, there we can see that at this low, Fed when Fed was facing the disinflation, okay, Fed held the rates at zero for let's look at let's look at this. Okay, they held the rates at zero for almost 700. All right, so the 702 days they held the rates lower, right, from March 2020 to February 2022, and then they started to raise the interest rate. So they are saying that they're gonna hold the interest rate higher for longer to push these numbers, right? So the headline inflation and the core inflation below 2%. So the 2% is here. So if I'm gonna pull out the 2%, right? So 2% is here. That's what they're saying. They're saying that they're going to hold these rates higher for longer so that the inflation can fall below their 2% target. All right, and core inflation is still very high. We can see that the core inflation is not even close to 2%. The core inflation is standing at 4.70. All right, so that's what they're saying. So we're going to hold the rates higher for longer. Similarly, the way they held the rates lower for longer, 702 days at zero, and that gonna cause the inflation to keep falling below the 2% target. Now market is trying to see through that how longer they're gonna hold the rates higher. Okay, and that was the speech from Powell at Jackson Hole meeting. Powell was saying that they're gonna hold the interest higher. Maybe they're gonna raise the interest rate for another time and push the rates at 550. And if during that, okay, holding the rates higher for longer, let's say they're gonna hold rates higher for another 700 2 years. 2 years, lot of time. All right, so 702 days is a lot of time. I don't think so they're gonna hold rates higher for 2 years. Before holding rates for that much longer, we're going to see something going to break out, and they will start cutting the rates even before that. But right now market is trying to see through how long they're going to hold the interest rate higher to push the inflation below 2%. This is a very, very important part which I'm telling you guys. Maybe you are not understanding, you are not interested, but this is very, very important part. This is going to play out for next 1 to 2 years. If you understand that, you're going to understand what direction we're going to have in the market, where the market is going. So what Powell said, they're going to hold the interest rate higher for longer, which has caused the dollar to stay stronger, okay, since last 1 month. All right, so market is now trying to see through for another rate hikes, possible rate hike on maybe in September. So if they are not going to raise and for another time in September, maybe next meeting. But this is what market is trying to see through. Market is trying to see through that we may still see another rate hike, okay, and Fed can hold the rates higher for longer. That's why they are buying the dollar. That's why dollar is pushing more higher, getting yields pushing higher, yields going higher, and dollar is just following the yields. All right, so yes, that's the story behind the dollar strength. Right, market is expecting that we're going to have another rate hike, and let's just buy dollar. Okay, that's why dollar went higher from these lows. Okay, or that chart played out really well. Okay, that's why that chart played out really well. Okay, this is the logic behind that. Market is seeing through for another rate hike. That's why everything is just down. Equity is down, crypto is down, just dollar is just up and yields are higher. Okay, or gold is down, or the silver is down. All right. So now market is trying to see through how longer they're gonna hold the rates higher. Yeah, and obviously, you know, the market is just trying to see through, and we are also trying to see through how long. Once again, market going to have that answer, we're going to see that breakout going to be over there on the dollar index, and we're going to have drop to the downside. So hopefully you understand that why we have seen the dollar strength on the dollar. And now the next is that we are expecting a dollar to drop. Why we're expecting dollar to drop? Now, you know, the logic is very much simple, guys. The logic is very much simple. The job market to slow down, right? When job market, the US job market to slow down. Okay, and we are having, you know, some couple of big numbers going to release this week. You know, non-farm payroll is also going to release this week, and JOLTS job opening. I'm gonna, you know, look at this. Look at this. Okay, there we can see that. So the JOLTS job opening is also slowing down. Right, so peaked at 11 and slowing down, and Fed wants this to go down. They want job market to slow down for inflation to come down, and if that data keeps falling, this is going to be a, you know, simply weaker story for the dollar, right? And that's what we are looking. So we are looking data to slow. Dollar is going higher because of the Fed is still hawkish, all right? Okay. And at the same time, Fed is looking data to be weaker. Okay, so when data going to be weaker, that's going to be a dovish story for the dollar to go down for another leg lower. Okay, so that's to go down, and also we are looking, you know, these two. We're not going to have a clear picture on here. So if I'm gonna go through, yes, this is also slowing down. We can see there that this is also slowing down. But it's stuck in the ADP non-farm employment change, stuck in a, you know, average area, average zone, and also this is to rise. So unemployment claims to rise to this to go higher, like we have seen back in, you know, we may not see, you know, this kind of rise on the unemployment claims, but yes, this to come out from this average zone, unemployment claims to come out. So this will tells us that the job market is slowing down, okay, and that will cause the dollar to get weaker. So the non-farm payroll. So non-farm payroll is going to be important. This is going to be the key. Okay, so it's very much similar like the ADP non-farm, but this is to slow down too. All right, so this is to slow down. So it's stuck in, this is the average zone, all right? So average is 180, 150. That's, you know, average. So it's back where it was, you know, the back before March 2020. So we have seen that dip in March in 2020. That's why the chart is not so clear, okay? But this is the average zone, okay? Average 150. So it has to fall, you know, below 150, all right? So less job creation is gonna be dovish story for the dollar, right? So hopefully you understand that what causing the dollar to go higher. Fed is causing the dollar to go higher, all right? And at the same time, Fed is looking data to slow down, right? Data to slow the economy, and if data keeps coming weaker, we are looking dollar to go down, all right? So there are many factors which can drive the dollar to the downside. Maybe intervention, bad data. All right, so you're simply looking for breakout. All right, so I'm going to start to look at the currencies one by one. All right, so we have you know, we have seen all those. All right, so we have talked about that. We have talked about these setups. All right, and inflation story. All right, what's happening with inflation in the in the US. All right, so if we're going to pull out the Chinese inflation, okay, so China is also facing similar story. Their inflation went below zero, facing this inflation, but their rates are still high, and they're cutting rates, but not so aggressively. So if they're going to keep cutting the interest rate, that's not going to help them, because rates are very high in the West. So their demand is coming. So China getting their demand from the West, and rates are higher in West. West is killing the demand by pushing the rates higher. So even if China is going to bring a big stimulus package to push the economy, so still they're gonna be successful till the rates gonna start falling in the West, because there is their demand. Demand is in the West. They don't have demand at domestically. So there we got the let's now talk about the technicals. All right, so what you are looking, what kind of setup you are looking. So if I'm going to look at the bigger picture, so yeah, so I have just talked about this part, all right, this part, but haven't talked about the bigger part. Why are we expecting the dollar to drop for longer term? So if I'm going to pull out this chart, all right, this chart, so we are falling. Dollar is, DXY is falling from that high. Okay, so now I hope you understand that. Now why we're expecting dollar to fall longer term? Because of this. Okay, because of this, you are expecting dollar to start falling for longer term. Now this chart is telling us that the inflation is going to fall for longer term to the downside. Okay, the longer term inflation trend is to the downside. Inflation has already peaked. Okay, PPI at 0, headline inflation is stuck at the 2.3, all right, and the core inflation is stuck 4.70, rates peaked at 550. And what can happen after that? What you should expect after this? Let's say if Fed hold rates higher for longer term, what they're gonna do after that? Any guess? Just type it over there in the YouTube or on the chat section, guys. What you should expect rates to do after staying over there for longer, I mean higher for longer. Go further higher? Should rates start after having a long correction over there continue to go more higher? What you should expect, guys, where rates goes after this, after staying at 550 or maybe 6, whatever, where rates should go, where the US interest rate should go? Any guess, guys? This is the important part. Where rates should go after 550. No answer, no guess, nothing. No, remains constant. Okay, so they're gonna remains constant for, let's say, for 2 years. Yes, that's the answer, right? So rates should go lower, right? Yes, rates. Why rates should go lower? The first, because the Fed is having the 2% inflation target. All right, Fed is having 2% inflation. They're saying that they're gonna keep the inflation at 2% or below 2%, not above 2%. All right. So when inflation gonna go to 2%, which is already going, all right, inflation is already falling towards 2%. Okay, then rates also needs to fall towards 2%. Okay, so then you should not expect rates to go higher. You should only expect rates to go towards the 2% where the inflation is going. All right, so that will cause the dollar to drop for longer term, because Fed has to cut the interest rate. All right, they will cut the interest rate towards 2% where the inflation is going. Okay, and that will cause the dollar to fall for longer term. Okay, make sure you understand this point and keep that point in your mind. And the longer term picture gonna be bearish for dollar. Okay, this is for, I'm talking about for 1 year and 2 years. Now the question is, against what currencies dollar gonna rise, and what currencies which currency is gonna fall faster than dollar, and which currency is gonna fall, gonna get even stronger against the dollar. So we're gonna talk about that. All right, so but this is the bigger picture, okay, which you need to keep in your mind. So So interest rate has to go down towards 2% for longer term. All right, that will cause the dollar to go down, and this picture is not going to change. This is going to stay there for maybe next 1 to 2 years. All right, so that's why we're expecting dollar to start a cyclical drop to the downside. Right, maybe we can see that dollar is going to down again all the way up to 70. All right, all the way up to 70 from 115. All right, the bullish cycle is over, the cycle which started from there. So let me find out this chart. Okay, this bullish cycle is over. Chart is not coming out. There you go. So this bullish cycle is over on the dollar. All right, now we're expecting dollar to start this bearish cycle, and how far that bearish cycle goes, okay, we will come to know that you know, when this will unfold. So hopefully you understand that, guys. The move which we got over there is not a bigger move. All right, this is not a bigger move we are, you know, looking it to continue. We are actually looking dollar to go there where the bigger picture is going to happen, and the bigger picture you see on this chart. Okay, that's the bigger picture. So that's why you are looking DXY to break down and continue to keep falling all the way back to this low. Now how you can trade, okay, the trade you are looking going to be on lower time frames. So I'm going to go to the similar way. All right, so similar way, the way I have told you on the dollar CAD. Okay, so at 2 hours chart is going to be all right. So as long as trend is holding, there we can see that the trend is holding. So if you're looking for moving averages, all right, so people sometimes they ask me that how they can, you know, use those moving averages. All right, so if you want to use those moving averages, just simply go to my profile, right, and go to scripts, right, and there you can use moving averages, combo, and zero crossover. Just go to there, and there are moving averages. Go and make it mine. All right, so let's just check there. That's creating a share link. There was a make it mine, you know, already. So if you don't want to do that, just simply copy and paste that code. Copy and paste that code. Let me try an editor, right? So let me try there. That works. Okay, go to Pine editor and just simply copy and add stuff over. Right, add to chart. It's not, you know, working, so some errors. It's showing some errors. So I'll try it to see if I'll, you know, can update and post that too again over there, right? So you can try if by copying that code work over there. Yeah, usually you see, you know, the make it mine. All right, so the make it mine, they have that make it mine first, right? They may have removed, you see there, make a copy over there. So maybe they have removed that. The trading view may have removed that, and you may not use that again. You see that the chart is just came over there, so it was there before, but they have removed that. Maybe you cannot use that with scripts anymore. All right, so we don't have that make it mine over there anymore. Yes, rates will go lower. So you can, you know, copy that code. Yeah, so this code, copy that code. Maybe, let me try again. Copy that code and paste that code. Let's see if it works now. Save and add. Seems it worked. Yeah, it worked. Yeah, it worked. So you can use those moving averages by going and copy that. All right, hopefully guys you got the point. All right, let me do it again so that you can understand that, those who needs those moving averages. So go there and and go down. All right, so go down. There you got the copy, right? Copy code, and go to your chart, go to your Pine editor, right? Remove everything from there, and just, you know, remove everything from there and just paste that, and there you're gonna see, you know, add button. All right, there you're gonna see add button on your chart. The add and moving average is gonna be over there. Bang, you got those moving averages. So okay, so moving averages are over there. Now let's remove those and bring those moving averages back. So what you're doing, so looking for this, we are actually looking this daily, okay, this daily wave to break down, this daily wave to break down, this daily wave to break down now, okay, and start falling to the downside. Just go to your lower time frame, like 2 hours, okay, or 1 hour, and you are looking to counter first, again similar like the dollar cat chart. All right, so I'm going to pull out my moving averages now, and we can see that the higher highs are just coming out within that higher highs, okay, higher highs. So you're paying attention over there, okay, and trying to catch that move first, right? This counter trend trade, all right, this correction to the within the moving averages, all right. And once that comes again within the moving averages, you're looking it to basically fall aggressively, correct, and keep falling to the downside. And if you don't see that breakout and prices simply push for another leg higher, okay, then higher high within that you know, wedge again, and then again you're repeating that step again from the highs. So as long as price is running within that wedge, okay, you are trying to catch the trade from the new high. Again, once you let me pull out some moving average, you know, some risk reward ratio on it, so that you can understand that, like what. Here you go. Okay, so something like this, you are trying to catch the trade first of all like this, again by putting your stop behind that. Yeah, so try 1.5 first, okay, try it. Don't you know, try to catch a big move first. All right, try to cover your loss first. All right, so try to cover your, you know, stop loss first. Okay, 1 to 50, back within these areas, somewhere there. And once you see that, yes, the trade is, you know, doing well, okay, and price action is just coming out, or nice price action is coming out, or the price is breaking down these moving averages, falling aggressively, breaking that trend, falling aggressively, breaking that below those moving averages, then you are looking to extend the target. All right, looking to extend the target all the way back within these areas, holding that trade for longer term, for much longer period of time, rather than, you know, just getting out. You know, once you see that the trend is confirmed, then you're looking to stay in for longer term to the downside. All right, okay, otherwise you are first targeting the at least 1-to-1 risk reward ratio. All right, and keep repeating that step every time, and you see that the price is, you know, forming new high over there. Okay, if we don't see that the breakout and price is going higher for another leg, okay, then repeating that step from those highs and looking for at least 1-to-1 risk reward ratio. Okay, but right now you are looking that trade from the current price. Well, that makes sense, guys. Okay, so same strategy gonna be with the euro dollar. Okay, so same strategy gonna be with the euro dollar. We are looking euro dollar to go higher. Okay, go back up this, yeah, for another leg higher. So we usually use, okay, the let me tell you, you know, a nice thing over there to trade. All right, let me tell you, teach you, by the way, a nice thing over there. You can use that next time for your trade. Okay, so if I'm gonna bring the New Zealand dollar chart here, so New Zealand dollar is a risk on currency. Okay, the New Zealand dollar is a risk on currency, while the Canadian is a commodity currency. All right, so if New Zealand dollar start moving first aggressively, it tells us that what is going to happen with the rest of the risk on assets. So this is actually a leading currency. New Zealand dollar is leads us, tells us that what is going to happen with the rest of the developed currencies, okay, and their risk on assets. So when New Zealand dollar start moving first sharply, it tells us that what is going to happen with the Australian dollar, what is going to happen with the euro, what is going to happen with the pound. All right. So right now, New Zealand dollar is reflecting. It is telling us that how China is doing, how the Chinese economy is doing. New Zealand dollar is flashing the red signals that the Chinese economy is not doing good, and maybe similar kind of slowdown is going to happen in the Australia, in the New Zealand, and the rest of the Europe. All right. So when New Zealand dollar moves first or fall first, it tells us that the rest of the bigger risk on currencies are not doing well. Okay, so we do have a chart over there. So I'm gonna go back to the Kiwi. Let's find the Kiwi chart. Hopefully we're gonna get that. So I think this is the chart. All right, this is the chart. So this is the chart when not this one. This is too old. This is 2017. I think it's maybe gonna be on 8-hour time frames. 8-hour time frames. Let's just try finding over there. There you got. Okay, this is the chart. That's the chart. Okay, so New Zealand dollar was started to fall over there from that high. Right, New Zealand dollar started to fall from that high, and it was telling us that everything is not all right. Okay, or you can say that the COVID-19 is going to come. And when New Zealand dollar started to fall over there against the CAD, or we have seen a big drop over there from that high, and at that time we were having strength, right, on the euro dollar. So if I'm going to go to the daily time frames, all right, there at these areas, so on these charts, so let's open the Kiwi CAD on side by side. So Kiwi CAD is a very good chart which tells us that what is the sentiment in the market, where the sentiment is shifting. All right, that's the place where we went extremely bearish on the euro dollar. All right, this area, this place, right, and there you got the euro dollar was there. So New Zealand dollar started to fall very, very aggressively over there. And there we can see that. But as euro was going against that, euro was rising. Okay, euro was going higher, while the New Zealand dollar is a risk on currency. Euro dollar is also a risk on currency. Dollar is a safe haven. Okay, CAD is a commodity currency. So we have seen imbalanced between these two. Yeah, so Kiwi started to fall, but CAD held because of the commodities, because of the oil. We can say that. Okay, it remained stronger. So it started to fall very, very aggressively, but euro went higher. So this was telling us that the COVID-19 or something like that kind of build-up is happening. Economies are slowing down, and Kiwi keep falling very, very aggressively, and we turn extremely bearish on the euro, and euro started to fall very, very aggressively after that. Okay, all these charts were telling us. So I'm just going to use one weekly chart, how bigger way we have seen over there. This weekly chart, we have seen a bigger wave. I've shown that chart before as well. So we are having a similar story again now. Okay, okay, we have seen a bigger wave over there. Now if I'm gonna pull out my Kiwi CAD chart here, Kiwi CAD is already there. Okay, and gonna weekly chart, so I'm gonna pull out the the euro dollar chart. So we are having a similar, okay, so euro on top of that. So that was the place, okay, where the reversal started, the bigger weekly reversal started there. That's the place, right? That's the place. Now we are having that divergence again. The New Zealand dollar is telling us that the US, you know, risk on assets are not doing well. Come on. Okay, so there we can see that. So the New Zealand dollar dropped, okay, removed all those gains, and euro hasn't removed all those gains yet. Okay, that's why you looking to sell the euro or buying the dollar index from the lows, from the bottom, for the counter trend trade, and selling the euro every time when it is hitting the top, right? So you may question that you said that dollar should fall for longer term, but why you are, you know, selling the euro from the highs? Why you are not staying bullish for longer term on the euro dollar, and you're looking to euro to go much higher, right? So, you know, if we are going to see significant slowdown, as I said, significant slowdown in the world, okay, so that significant slowdown will give, you know, eventual strength to the dollar, okay, or we can say that if something is going to break down in the system, then the only safe haven going to be the dollar. Everyone will run after the dollar, and dollar going to keep. Right now, that's the signal which is being reflected by the weaker New Zealand dollar. New Zealand dollar is reflecting that something is going to break down, or something not break down, or something significant is going to happen, which can cause the euro to drop and pound to drop back to the bottom. So that's why I said earlier that the pound and euro dollar, they still can visit the lows, okay, even, you know, even after having the policy divergence between the central banks, yeah, or in longer term rates have to fall in the US. But the question here is that who is going to blink first? Who is going to cut the rate faster than the others? Right? That's the question. If a bank is going to cut faster than the others, then obviously its currency is going to fall faster than the other. Okay, that's the point which we need to understand. Who is going to blink first? That's the question. And it seems that the Reserve Bank of New Zealand is going to blink first than the other RBNZ, RBNA, or Bank of Canada. So right now, this New Zealand is telling us that the Reserve Bank of New Zealand is going to blink first. They're going to cut the rate first than the others, and that's why, you know, currency is showing those signs because of the Chinese, you know, disinflation fight. So the point here is that you know, right now the Kiwi is reflecting that the euro may fall after that. Okay, you need to understand that, guys, this before you are going to buy the euro or sell the euro, or are going to do anything. You need to understand. So that, you know, then you will be able to, get the idea that where you should risk more and where you should risk less, right? Then you're going to get the idea that where when you're going to be at the top, you're going to add more risk. When you're going to falling, then you need to risk reasonably. No need to risk more. Okay, now there we can see that. Right, and there we can see that. Now this is, we simply call that the divergence is just happening between the central bank. All right, so Reserve Bank of New Zealand is not as much hawkish as the ECB is right now. That's why, you know, New Zealand dollar is falling and the euro is not falling. Okay, I'm looking against the dollar, not against, you know, CAD on euro. So this chart is telling us that we still can see, okay, this lag. We cannot rule out that lag. Okay, and the logic behind gonna be that the ECB may change its policy, you know, or can hold the rates, you know, constant, or simply gonna say that they have won the inflation fight. That can drive that lower. Or if something is going to break down, then euro going to start falling all the way up to 78%. All right, so this is the 78%, which is comes at 1-1. Okay, so for this trade, okay, this trade, the price has to be there. You have to wait for the price to test that top, okay, and then you are going to counter it to the downside rather than chasing the trade at the current price. You shouldn't chase the trade at the current price. You are looking it to bounce back for another leg high. So we are expecting at least euro to go there, okay, at least up to within these areas, at least up to 1.1, and then form something like a head and shoulder formation over there, okay, this kind of head and shoulder formation, and then start falling. So now let's get back to the euro now. Hopefully you understand that now, guys. We rely more on the kiwi. The kiwi is a leading currency. It tells us that what is going to happen with the other risk on currency, so we don't go against against stuff that. Okay, so at least go back up. Now let's talk about the setup. What kind of setup you are looking at? Okay, all right, so I'm gonna go and look at this lower time frame. Okay, again, picture is same like the DXY. If I'm gonna invert that, I'm gonna look at there, nothing new. Okay, so I have shown you on the DXY 2 hours. Okay, so price is holding the trend. The chart is just inverted. Nothing serious over there. The chart is inverted like DXY. Price is holding these trends, okay, holding those highs. You're looking this to fall within these moving averages. From the highs, you are looking to catch the short-term trade, okay, within these areas, and looking to, I'm gonna use the short position. Yeah, so just inverted. All right, so like this. So like this short-term trade. And looking at least 1.5, all right, 1.5 first. Price has already moved away from the lows. 1.5 first, and once the breakout comes, you are looking it to continue to keep pushing higher aggressively. All right, and once simply when price comes back within the moving averages, you are being careful. I'm gonna pull out there. Okay, when price comes back within the moving averages, you are looking it to break out aggressively for upside. All right, these new lows, this trade, and if breakout, bang, go back up daily high, or at least up to 111. All right, and if price comes over there within the moving averages, start struggling these highs, all right, don't hold that, get out, and another leg lower within that wedge. As long as price stay within that wedge, just keep countering it from the lows, and once price come back within the trend, you're looking it to break up. If break up, then holding. If not, then another leg lower, the way my arrows are showing. All right, my arrows are showing. So hopefully you understand that. So right now you're watching these lows carefully, okay, and looking price to, there is no trade at the moment on the euro, okay, but during the day or today is a bank holiday, prices still can fall over there back to that low, and these are the averages you are looking price to hold right now. Okay, these are the averages. So similar story gonna be on pound. All right, so story is same on the pound, new lows, and the logic I have explained to you guys very well, so don't think we need to talk about that. So again, so new lows, you're looking for this to go back up. All right, this short-term trade, if breakout, correct over there, go back all the way back to that top. If doesn't, then fall for another time, okay, and then go higher. Okay, now let's talk about the others. Australian dollar is also same, right? So for when you are looking to buy the Australian dollar against the dollar, so the chart you need to keep watching closely is this. This is a very important chart right now, okay? The intervention in this chart can tell you that the Australian dollar is going to rise or not. Right now we can see we have seen some intervention there from the People Bank of China within these areas. Some intervention happened over there, price dropped, and some intervention happened over there, but again they some other news came, like stock 50% discount on tax, stock trading, yeah, that caused price to go down and then again bounce back. So if we are going to see another leg higher on the dollar Chinese yuan like this, okay, then the Australian dollar is not going to get stronger. Okay, we are expecting Australian dollar to rise, okay, then we're not going to get that move. The Australian dollar going to keep dragging more lower, going to stay under pressure. So you need to understand that what's happening with the Chinese economy. So we are looking this to go higher. This is the structure, okay, simply on the Australian dollar. So on lower time frame, you're paying attention very closely, again looking for at least 1-to-1 risk reward ratio first, and once you see that the trade is growing, you can extend your targets. All right, so these areas or these lows, this short-term move, and if it rise aggressively correct, then go all the way up to the daily highs. All right, this bigger ABC move too, this bigger, this ABC move to at least give us this move, okay, or breakout. Okay, so same setup going to be over there on the New Zealand dollar. Again, as I said, when you're trading on the dollar pair, if you're going to trade all these dollar pairs, you're going to multiply your risk. Okay, you're going to multiply your risk. Make sure you choose the right one, or you understand that how many pairs you need to trade. So same trade going to be on same trade we are expecting on the New Zealand dollar. Right, so this move, this ABC move to breakout and continue to keep pushing more higher like that. So if I'm going to go to the lower time frame, on lower time frame, same, you are actually countering the trend. Okay, remember, you are actually countering the trend. You understand that. Okay, so this move, this short-term trade, watching these areas, okay, and this trade, and if the move is going to be very, very aggressive, that's what you are looking at to go higher. If not, then just take that trade and maybe one more leg lower. All right, make sure when you're buying these charts, buying on these charts, and specifically the New Zealand dollar and Australian dollar, make sure you understand that there is still a risk for, keep pushing lower. So use proper risk, proper stop loss over there. Okay, so we still can see another leg lower on the, this is the bigger picture. All right, and we still can see another leg lower like that on the dollar against the Chinese, against the franc. Right, so I wouldn't suggest you to trade on this, to be honest. This is very slow moving pair, struggling. All right, so better to just ignore. All right, or if you still want to trade, then trade trending to the downside for short term to the downside, rather than trading on this. So I will simply just ignore that chart. All right, so it's not a best chart right now. The dollar CAD, I have already shown you what you are looking. Okay, so not looking that trade. Okay, not looking this move from the current price, looking for another leg lower. Right, looking for another leg lower, looking for another daily leg lower. Okay, the way I have already told you, pull out your moving averages. I have told you how you can bring those moving averages on your chart. Right, go to my profile, check the script, and you can pull out those moving averages chart from there. All right, so there is this correction. You're watching these tops. Again, this is also a counter trend trade, short-term move back when moving averages break down, looking it to keep growing to the downside. If not, if it doesn't break, all right, then get out another leg higher within that channel. Right, paying attention at these highs. Yeah, so the red zone is telling us you're looking to pay attention closely at these areas. Again, same trade, same counter trend trade. Okay, so the chief, against the yen is not doing good right now, but it's telling us that we may see a quick sharp sell-off at any time. Right, so this is still keep growing. All right, so I don't see any trade yet on this chart. It can keep growing the way it is doing right now, or we can see intervention and then it can fall very, very aggressively for the downside. And if you are trading on this chart, still short-term trending for upside, and make sure you use proper stop loss over there, because it can fall very, very aggressively at at any time. Again, if I'm going to tell you by logic why we can see, you know, a sharp drop over there, you know, we have to look at the policy first. Yeah, so what is the policy divergence happening right now? The simple, you know, let's just quickly look at that. All right, so let's just quickly look at that, why we can see a quick sharp sell-off over there. But not just on the chief yen, all right, across the yen pairs. That sharp sell-off can happen at any time, and once that sharp sell-off going to happen, that's going to be, you know, very sharp, right? Very sharp. If I'm going to use this chart, okay, this is the Switzerland inflation. This is the Switzerland inflation, which is of falling very aggressively to the downside. So if I'm going to pull out the, again, core inflation on it, CH, you know, CH, CIR, that's the core inflation. Core inflation is also falling, and if I'm going to pull out the INTR, that's the CHINTR, that's the interest rate. Okay, so there we can see that the inflation in Switzerland is falling, the core inflation is falling, and the Swiss National Bank is holding the interest rate. And if we're gonna open the same charts here on our right side, right, so we're gonna open the same chart. The first chart I need to open is the inflation, right? So the Japanese inflation is way higher than the Swiss national, and the Switzerland inflation. The Japanese inflation is much higher, but they are still not declaring the victory. The Bank of Japan is still not declaring the victory. They can declare at any time, guys. We don't know when they're gonna say that their 2% target is reached, and they are looking to change the policy, okay, and that can drive a sharp sell-off to the downside. So this is the Japanese inflation. They were looking to bring the inflation back. They brought 4.2, 4.4. Right now the inflation is stuck at 3.2. All right, and the core inflation, we need to the core inflation. All right, so JPC IR, that's the Japanese core inflation. Okay, very much similar like the headline inflation. And JPINTR, that's actually the policy divergence, guys. There where we can see the policy divergence, okay, the Bank of Japan is having with the rest of the world. Okay, so this is, yeah, I can put, you know, other central banks chart, inflation and interest rate here. So you're gonna see many of them, okay, like Australian ECB, Fed, UK, or Canada. They are having similar story. Okay, inflation came in the West, they raised the interest rate. Now inflation is coming down. Okay, and at some point the rate's gonna start coming down too. But this is not the story in the Japan, right? Inflation, you know, came aggressively, but they are still holding the rates lower. They are not changing the policy. They're still saying that, you know, they're gonna hold the rates, you know, in negative territory. They are not declaring the victory. That's the basically policy divergence. So let's say, if inflation going to surprise for the upside in the Japan, which is very less likely, inflation is not going to surprise for upside in the Japan. The only thing is that the inflation gonna fall in the Japan, all right, because the inflation is falling in the rest of the world, all right, and the external factors will cause the Japanese inflation to fall too. External factors. all right, and Japanese inflation gonna start falling too. So if inflation start falling in the Japan, all right, this is also going to shrink the policy gap with between the other banks as well, all right. This is going to shrink the policy, you know policy gap. If Bank of Japan doesn't do anything, all right, and inflation start falling in the Japan, this is also going to shrink the gap, right? Okay, how this is going to shrink the gap? If Bank of Japan is not going to do anything and rates are falling in the other countries and Japanese inflation is falling, it's going to shrink the gap, and yen going to start getting stronger in longer term. And in case if Bank of Japan is going to change policy, they're going to say that their 2% target is reached and they're going to come out from the negative territory. This is going to be surprise for the market. All right, this is going to be surprise for the market, and the carry trade, which is causing the yen to keep getting weaker. Right now, the carry trade is causing the yen to keep getting weaker. Okay, what is the carry trade? The carry trade is, guys, simple. People, investors, they are borrowing money from the Japanese banks, all right, at 0% interest rate, and investing that in other, higher yield assets. Okay, and paying their debt back in the lower yield currencies. So that's a 0% interest rate. Yeah, taking loan from the Japanese bank, investing in the other assets like the US assets because their higher yields are there, or the European assets, higher yields are there, and causing the yen to just keep getting weaker. But when that will change, when either because of the Bank of Japan policy, if they are going to shift away from that ultra loose monetary policy, yeah, then that carry trade gonna start winding up. Okay, people gonna stop worry about their debt, because the rate, if once the rate gonna start rising in the Japan, people gonna start worrying about their debt, right? And rates gonna start falling in the rest of the world and going higher in the Japan, all right? They're gonna start winding up their carry trade, and once they're gonna start winding up their carry trade, the gap which we are having between the central bank's policy, that gap going to start shrinking aggressively, and we're going to start seeing the strength on the yen, right? So the longer term picture is going to be a bullish for the yen. That's not going to change. And this policy, this policy change, the sharp policy change from the Bank of Japan, going to cause that aggressive sell-off. And we may see, a big move. We may see a big sharp sell-off over there, very much similar, something like that. Okay, that can happen, right? That can happen, guys. Sharp sell-off like that can happen. So let's get back to the EFN, all right? So staying with the trend, okay, and waiting for a sharp sell-off and breakdown. Right, so we can still see another trending move over there like that. I still can stay within that. Right, so staying within that trending move, and once you see that the policy change is coming and the big sharp sell-off is coming, you are just simply chasing that. All right, so right now the trending move to just hold those moving averages and price to just stay bullish. Let me pull out some box over there, rectangle. Okay, hold that and do not break down and go back up to that top, and from that top to sharp very aggressively. So dollar yen is also similar. So make sure you understand that when you are looking to trade on the dollar yen, right? So again, this charts apply. This chart applied to the what I need to just change here is the inflation. All right, so the US inflation, and the rest of the picture is the same, right? Very much same. Interest rate or core inflation is also similar, so policy gap to shrink. And right now the dollar is still bullish. Okay, we may see breakup, guys. There is no hard and fast rule that the price gonna hold that. So we may see a small push up break up, but I'm not anticipating a big breakup for upside and price to just continue to keep pushing more higher, right? So I'm anticipating this to maybe push slightly and then start falling. So I'm looking for again some kind of comments from the Bank of Japan and some or some kind of intervention, as I said before, and dollar yen to keep falling all the way up to this 27 or maybe 120 areas. Okay, in longer term, guys, I'm telling you, in longer term, yeah, the chart which I have just shown you, this gap gonna shrink, and when Fed gonna start cutting the interest rate, so there is a possibility that the dollar yen gonna keep falling all the way up to the 75 mark. This policy exists over, this possibility exists over there. Okay, so dollar yen can keep falling all the way up to this 75 area. There is a good chance if something breaks, right, and if Fed start cutting the rates so aggressively, then dollar is going to fall for a big time, right, for a big time. So but right now you are looking for a counter trend trade, simply not for that big move, right? And these going to be the targets are already showing over there, right? And right, so looking to counter from that top, looking for this short-term trade, and if it keeps falling all the way back to there, and possibly all the way back to that. So if clear intervention comes over there from any central bank, then you just don't need to listen anyone. Okay, just keep following this sharp sell-off. If that doesn't come, this is still bullish. All right, still bullish. As I said previously, that guys, when we were expecting, I think, they are within these areas for the continuation trade to the downside within these areas. Okay, within these areas, and I was saying that guys, still one more leg higher is possible, and that leg higher happened. Dollar was strong, so that has happened. So you're looking at the counter. So same applies to the euro yen. So all these yen charts are same. Policy divergence can cause that big move. I mean, when that where is the bar pattern? Here is the, okay, this, we may see that kind of drop, and reason I have told you why yen is getting weaker. Okay, and once policy divergence. So how to trade? Simply look at the trend. We still can see that the higher, we only can counter that from the top once we see that enough price action is just coming over there. So right now you are looking within these areas, okay, and holding price to just fall back within these areas. Okay, there is a possibility that the euro can continue to keep climbing all the way back to that top, right? So it can push higher. So once euro yen get back to 159.50, you're looking for this trade, counter trend trade, right? And if that's going to be sharp, then looking to continue to keep falling. If that doesn't break down, then again small trade back within these areas. Okay, this simple trading sideways from those tops, and in case if it breaks up, so we're still going to look for counter trend trade. So we are not looking for the continuation trade for upside, we are only looking for counter trend trades from tops, all right, after having some price action for the downside. And if the sell-off is growing aggressively, then looking for that to continue to keep falling for the downside. If I'm gonna pull out my there is also a possibility for the breakout of this flag, which is just emerging over there. Maybe price not gonna test that top, right, and gonna fall without hitting that top. Okay, this is actually you are looking for first, all right, like this, 1 to 50, right, at least 1.5. Okay, and if move is going to be aggressive, all right, then looking it to grow all the way within these areas, all right. And if it breaks down, let's say if it doesn't pass that top and break down very aggressively, okay, then trade gonna be something like that, and you're looking it to again one and a half first and then keep growing. Yeah, so I wouldn't suggest you to sell for that breakdown in case if there is something, fundamentally going to drive that move to the downside, right? So right now, only intervention can give us that kind of strong breakdown. So we are, just waiting for that. Otherwise, let the price test that top and then counter it from after watching price action from those tops, and keep doing that every time. And you see that the new highs are coming over there. These are basically a counter trend trades, all right? We're trying to counter the trend which we are having over there to look for longer term reversal. So same trades apply there, right? Counter trend is bullish, pushing more higher, and looking to counter it again. So it's correcting over there like that, like a flat formation. Okay, I wouldn't suggest you to chase that, as we can see that the chief is still pushing more higher, and there is a possibility that these charts also going to test the top. And if you are looking to trade, then stay trending. Okay, there we can see that the chief is testing that, almost about to test that top. All right, then we're not going to have that continuation to the downside. Okay, this is going to keep pushing more higher. Okay, like that. Hopefully you got the point. Okay, so Chief Yen is testing the top. We may see continuation to the upside on Yen. So only look for correction from the top. Same goes with this chart. Okay, so CAD Yen has a good chance that the CAD Yen can test that top. All right, this top. But you're watching these areas, right, and looking, short-term sell opportunities from these areas. All right, so for these trades, and if they fall, then again keep falling for the downside for big time. Okay, so Uzi Yen can push more higher. So this is the only chart where I wouldn't suggest you to do anything. Yeah, because there is possibility that that the Uzi Yen can push higher for another leg higher. Okay, we may see breakout and it can go there. So yeah, if it tests, then if it tests that top, then you are looking it to go there, and then you are looking it to start countering again from that top. All right, so if it goes down, then simply ignore. It is not at a best place where you can trade for this move. Right, this is what we can have. All right, so same applies to this chart. Again, they can break up. They are lagging and they can break up at another leg higher. They can test that. I have shown you a buy opportunity on these chart on Australian dollar and New Zealand dollar from the lows. They can go higher. Give me 5 minutes, guys. Give me 1 minute, yeah. 5 minutes gonna be too much, so just give me 1 minute, yeah. I need some water, yeah. Sorry guys for waiting. So Kiwi yen, all right. So we still can see another leg higher on the Kiwi yen. All right. So Kiwi yen still can push for another leg higher. So the reason is very much simple that if I'm gonna pull out, all right. So there we can see that. So they are still telling us that they're behind. Okay, the chief yen is just simply pushing more higher, while the Kiwi yen is still struggling to the downside. Okay, so I mean going down. So we still can see these charts can push more higher. So yeah. So we don't have any sell opportunities on them. So if you are looking to trade, all right, then I would suggest you to stay short and bullish on them, but make sure, as I said, you know, anything can happen from the Bank of Japan. So when you're trading on them, just make sure you keep in your mind that any intervention or any policy change can drive them aggressively lower. So keep that thing in mind, guys, when you are looking to trade for upside. Okay, right now it's correcting on this, you know, 4-hour time frame and struggling, and we may see, you know, breakout for upside like that. Okay, same goes with the Uzi yen. Both are same. Similar structure is happening over there, and a daily structure and sideways market, and it can also push up for upside. So euro pound. The euro pound is simply setting up for a buy opportunity. All right. So euro pound is simply setting up for a buy opportunity, and you are looking it to break out for upside. So we have already seen some bounce off on it, and I wouldn't suggest you to chase it from the current price, but when it comes to test the bottom, okay, then you are looking it to go all the way back to that high in these areas. So the logic behind is very much simple, that the pound is not doing really well against the franc, all right, and that's telling us that the strength can come on the euro, and pound can fall against the euro. Okay, and if I'm gonna pull out the pound chief chart, that can tell us that there we can see that the pound is struggling against the, I'm gonna invert that chart. I'm gonna look at that. This is telling us that the pound is still strong against the euro, or euro is still strong, we can say that. So this is actually telling us that the policy divergence, okay, because of the ECB's is more, this is actually telling us that the Bank of England is more hawkish than the ECB. That's causing the euro to fall against the pound, all right. And on the pound chief is telling us that the Swiss National Bank is more hawkish than the Bank of England, which is causing the pound to fall against the franc. Okay, but if we're going to look at this, where the chief is right now, the chief is testing these areas, okay, within these areas against the, I mean, pound is testing these areas against the chief, or these lows, which is actually here at that date, right, at 26th of April. So this is actually causing, telling us that we may see drop on the pound against the euro, okay, and that move can happen over there like this. So if this, you know, pound chief flag breaks down for more downside and continue to keep dragging lower, then there's going to be big drop can happen over there on the euro against the pound. So if we're going to look at the lower time frame and gonna invert and, you know, bring that inversion back, so the move has already happened over there. So the euro bounced back already from the lows. So bounce back already from the lows, all right. So I wouldn't suggest you to chase that, but in case if it falls back to these lows, then you are watching it closely to hold these lows, all right, these lows for buying opportunity. Okay, do not chase the continuation trade. There is no continue. I mean, if you're gonna go lower time frame, gonna start looking for buy over there, you may get that, but that has a high risk to get stopped out over there within these moving averages, right, like that. So I mean, I wouldn't suggest you to chase, these short-term trades over there. They are not making these short-term trades, 50 people or 80 people trades. So better to let the price to fall again, these lows, hold these lows, and you are completely looking for a big wave to the upside and a better place for buying. All right. So pound chief is just simply opposite, right? Pound chief, pound chief is also not at a good spot where you can trade. Okay, we can see a complete drop on it, all right, and then again test that high and then continue to keep dragging lower, or it can go back up. Okay, it can go back up. So it is in a sideways market there where we can see a complete breakdown and continue to keep dragging lower, or our price still can visit those 114 areas. So in case if it tests 114 areas, it's gonna be a sell opportunities. But right, it's just simply staying within these sideways areas. You only can hope for these supports to hold. All right, and you can look for this trade, and if in case it grows, then continue to keep growing all the way back to that high. All right, and there is this trade is simply just based on support. All right, price to just hold that just based on support, previous support, nothing logical and against the trend. Okay, if it makes sense and you have a good price action over there, you can try it and look for this to go back up this and keep growing all the way back to that high. And if it breaks down, yeah, it's going against with the trend, this previous trend, and can fall aggressively and can continue to the downside. So yeah, have to be careful when you're buying, because that trade going to be against the trend. All right, and that will lead to euro pound to fall back. Okay, if pound rise against the franc, this will draw back to that low, and then again we're looking for buy within these areas. All right, so EuroCAD, looking to EuroCAD to rise for a big time, right? We are expecting EuroCAD to go all the way back to that high. So it came back again within a sideways market. So it's still in a big lag, all right? So when I say it is still in a big lag, then that big lag means that if I'm going to pull out, let's say Euro New Zealand, Euro Oz or Euro, or the right, so in a big lag mean you're gonna see that here clearly, not on top of that. So Euro New Zealand dollar weekly chart, and there we can see that the Euro New Zealand dollar is coming aggressively back to those crash areas, or testing those March 2020 crash areas. Okay, but that's not the case here yet. Okay, we still got some room to run here on euro against the CAD. We still got some room to run, but that's not the, I mean, Euro New Zealand dollar is just simply leading us, telling us that Euro New Zealand dollar, Euro Australian dollar, that what can happen with the Euro CAD. So we are still I mean, looking for reversal from those lows, if you remember that, for longer term. I think I do have that chart. So we were expecting that big longer term reversal. Now it's happening right now. Slightly went lower, price. It's not slightly went lower. Okay, so we have seen a couple of weeks drop, and then price started to build up its momentum within these areas and started to go higher. But we are still looking it to continue to keep trending for upside. Yeah, it's a big sideways pair. Yeah, it remains in a sideways market for a long period of time. We can see over there, right, within these areas. All right, within these areas there we can see. So when you are trading on that, then make sure you understand that sideways market is very likely on this. But right now what you're expecting, simply a breakup, this for our time frame correction, to just simply you're looking for these areas to hold, right, price to hold these areas. Okay, and short term trade back to that high and possible that top or in case if the trade is growing, then go all the way back to that high. Right, let me remove those moving averages. So yeah, this is what we are looking. And in case if it drops, okay, in case if it doesn't hold these areas and drop and fall back to these lows, right, so still we're going to look for it to go higher. There is no reason behind the euro to keep falling against the CAD. Okay, as I said that you know, when slowdown comes or slower growth comes, then the euro is a safe haven on CAD. So the trend going to be bullish for upside. All right, so CAD chief, you know, struggling against the actually this is what we are expecting to happen with the yen, right? But Bank of Japan hasn't changed the policy. Both banks, Swiss National Bank was having negative interest rate policy, and Bank of Japan both were having negative interest rate policy. Swiss National Bank has come out from negative interest rate policy, which has caused significant strength to the chief, to the franc, all right? But that's not the case with the Bank of Japan, all right? Bank of Japan has got inflation, but they are still in the negative interest rate policy, which is causing the yen to stay weaker. But once they're going to come out from the negative interest rate policy, or when they're going to change the interest rate policy, we may see similar kind of strength on the yen, the strength which we are having right now on the chief, all right? So chief is just keep falling to the CAD is keep falling. So what you can do against that trend, guys, if you are looking to buy the CAD against the chief, then you only can go against the trend, all right? And the risk is always there for that trend to continue to keep stay intact. So what you can do, you only can counter that trade, you only can counter that on lower time frame, yeah, with a very tight stop loss, and risk is always there for a breakdown. You only can do that. There is no trade for continuation to the downside. You cannot sell that for the downside. Yeah, so if you want to trade, you can trade for this short-term move for upside. I wouldn't suggest you to even trade on the CAD chief. Don't trade for buy. If you want to trade, yeah, you can trade, you can buy, and you're gonna be lucky if the correction start happening, the correction which we are anticipating right now. Yeah, so something like that. You're going to be lucky and you're going to have that trade. You're going to be profitable if luck is on your side. Forecast the bar pattern, okay, like that. That kind of correction start happening, and then you can extend your target all the way up to that high. Yeah, so it's a risky trade. If it works, then great. If it doesn't work, then stay away. Don't trade on this. You are having many good charts. So New Zealand dollar, okay, so what you should do, first of all, you need to understand that what you should what's happening here on this chart, right? So if I'm gonna finding my old chart, okay, so there you got the pound New Zealand dollar. Okay, so we are having strength simply on the pound New Zealand dollar, pound against the New Zealand dollar. Okay, so the strength is significant, all right? And the logic behind that significant strength is simple, guys. We were expecting, a Bank of Canada, Bank of England to raise the interest rate, bring down the inflation, and New Zealand, Bank of New Zealand to blink. That's causing the significant strength on the pound against the New Zealand dollar, right? And we were expecting pound to keep rising. We have seen significant strength, nice aggressive rally on the pound, and even it has gone beyond the targets, right? Okay, you need to understand the logic first before you start trading on this chart for either direction. You're gonna get the idea that where is the potential, right? All these updates I was just keep updating, and finally that chart took a lot of time. Okay, the move started to appear from there. Okay, these areas started to appear there. The last update was there. Price did not continue, went lower, and then again the rally started to happen. You need to understand the logic behind that, why that has happened, Okay, and is there still a risk for this rally to continue to keep pushing more higher, or it's done and we are going to see more downside? I mean, going to see drop. Okay, so again, the charts which can tells you that is the inflation and interest rate. Okay, inflation, and is there still a risk for that kind of crash? Okay, is there still a risk for that kind of crash? Okay, the crash which we have seen in 2015, crash on Kiwi, all right, or crash on risk on assets. Okay, we have seen that crash back in 2008 as well, right? Risk on assets crashed, and then back in 95 or here in 2000. Okay, all these are recessionary areas which I'm highlighting. Pound went higher. Pound played as a safe haven on top of the New Zealand dollar, which caused that. So is there still a chance that that spike can happen? Yes, there is a perfect chance that a spike can happen. Again, if we look at the inflation, if we look at the UK inflation and New Zealand inflation, that's telling us that this possibility exists, right? So this is telling us that, right? So the best charts which explaining that is there. Okay, so rather than looking at these charts, so we can use these charts, right? These charts telling us that clearly that what's happening with the inflation story. Okay, so 3 month. So now this chart is telling us that the interest rate is still high. I mean, close to the inflation. So the inflation, we get the inflation report in the New Zealand after a quarter, I think. Yeah, quarterly report. We get quarterly report, inflation report in the New Zealand, and monthly report in the UK. So in the next inflationary report, we are going to see significant drop in the US, in the New Zealand inflation. New Zealand inflation is going to drop significantly, and rates are going to be higher than inflation significantly. Now these numbers, okay, so 0.50 and 1.55. These numbers are telling us that interest rates are significantly higher in the New Zealand, while the interest rates are not higher significantly in the UK. Interest rate is not higher than the inflation. Not higher, okay? Not higher here, but just close to the inflation. So interest rates are taking over the inflation, going above the inflation. But here they are still significant. Inflation is significantly higher in the UK. 1.55 is telling us that. Means that the interest rate still can go higher in the UK, but not higher in the New Zealand. Okay, so this is actually telling us that the policy turn is ahead in the New Zealand. Policy turn means interest rate cuts are ahead, but this is not the case in the UK yet. Policy turn or policy change is not ahead in the UK. It means that more rate hikes are coming in the UK. More hawkish Bank of England is ahead. All right, and that's causing the pound to stay strong against the New Zealand dollar. Okay, and New Zealand dollar is getting weaker, or investors are getting ready to, selling the New Zealand dollar and buying the pound, because first what was happening before, what investors were doing, they were selling the pound, all right, at here from there. They were selling from 2020, they were selling the pound, buying the New Zealand dollar, but because they were expecting that the Bank of New Zealand going to be the first to start raising the interest rate, going to change the policy. Now this is in turn now. So is there a possibility for pound to continue to keep rising against the New Zealand dollar? Yes, because New Zealand is at a crossroad where they can start cutting before the Bank of England, and Bank of England still can keep raising the interest rate, which can cause the policy divergence, policy shift in different directions, which can still keep pushing the pound higher. Hopefully you understand that when you're gonna do that, when you're gonna start selling the pound against the New Zealand dollar, means that you are going against the trend. Okay, where is the trend? The trend is here, and here we can see that the trend. On this chart, you can see that the trend is this. Okay, this is not the trend. Okay, actually the trend is in the policy. Okay, there. This is telling us that you know, the trend has been set by the Bank of England, and if they are going to change, then the trend is going to change. They are going to change their policy, then the trend going to change. So hopefully you understand that when you start selling the pound against the New Zealand dollar, it means that you're selling against that trend, and you're countering that trend, you're countering that policy, the policy which Bank of England is having in place. All right, so yes, you are looking to counter simply. Okay, what we are looking, we are looking to buy the New Zealand dollar against the dollar, looking those currencies to bounce back from the bottom. So once you're going to see that they're going to bounce back from the bottom, you're going to see that they're going to start gaining against these currencies as well. Okay, and Kiwi going to start rising against the New Zealand dollar. All right, and make sure, yes, what you need to understand here is that there is a proper risk for more upside, for breakup, for sharp rise, or for sideways volatility. So make sure you use proper, you know, stop loss over there, rather than just, you know, blindly selling and forgetting that you had a trade over there and market just keep rising for more upside. All right, so what's the trade right now? The trade is just simply, if I'm gonna, you know, make it more simple, for this, okay, this is the top, which is in place right now. So how far it goes, we'll see that, but right now you are looking it to, if it keeps falling for a big time, I mean, which we are not anticipating at the moment, as policy is still in place. Okay, but you are simply looking for this to fall back within the daily moving average, right? Or go all the way within these areas. Okay, within these are not a, it can fall, guys, simply it can fall for a big time. Okay, like this, it can fall for a big time like that, but right now there is no logical reason behind that for a big time drop. Right, the fundamentals are not supporting that big time drop. Okay, so you are trying to counter it, and trying to counter it with all precautions and using a proper stop loss. Right, and if I'm gonna remove these couple of arrows and gonna, yeah, so go to the, we still can see, okay, this is basically the structure right now. We still can see another leg higher, and this is going to be the structure. That's the structure. Okay, so we still can see another leg. I always forget, where is my rectangle? The rectangle should be here. Right, we still can see that one more leg higher, and then again we can start falling the price from that top. Right, so what trade you are looking actually right now? 4-hour time frame, moving averages are coming over there. Okay, so yeah, so momentum indicator is still finding for another breakout. Right, we're still finding for another breakout, but this is not the trade we are looking. We are looking this to continue, okay, this way, and go all the way back to that low. But when you are going to sell, make sure you understand that there is still a possibility for it to break up. All right, so simply this 1 hour time, this is the trend, okay, which is just trying to appear over. That's my point. The trend which is just trying to appear over there. You see that the sell-off came over there, the early sell-off came over there on the pound against the New Zealand dollar, right? And moving average is just turned down, okay, and trying to set the trend for the downside. So basically you look in this trade first, okay, and if it goes well, then just keep going well. All right, in these areas, within these areas, this is the trade where you are looking first. Okay, and if it gets sharper, the sell is get sharper, okay, and then you're looking it to go all. First of all, you're looking again 1 to 50 first, yeah, and then this area, this is the target, and if it keeps falling, then as shown on the daily time frame, keep falling for much longer period of time all the way, right, these areas. So same trade gonna be here. Okay, so we were expecting some buying opportunities over there. Let me find, so same You see that once you understand the policy, okay, so you can easily understand the direction of the market, what's happening with the policy. So I think that was the chart. You're expecting it to go higher, right? We got a big leg over there, right? And I do have charts, updated charts. The pound Australian dollar, right? It never tested that low after hitting these areas. It just went higher. This wave happened after that. All right, and that's the wave happened after that. It was just keep rising, keep rising, keep rising, and yeah, it took off that oil crash highs. Okay, now what's next again? The way I have explained this, right? The policy divergence, again, there is still a possibility for more upside. Okay, it can go much higher, it can go even there or even these areas. Okay, these areas can be tested. So I mean, the worse the economy gonna be in the world, okay, it will keep pushing higher. The sharper the slowdown gonna be, it will keep pushing higher, like in 2008 or 2008, or like 2008 and 2015. Yeah, it can continue to keep pushing higher. So the cells you are going to take in there from the top is going to be against the trend. Okay, same trade. We still can see another leg higher. The structure is similar. Arrow should be here. There is the arrow. Okay, so we still can see that leg, and this is what you are expecting. Similar trade like the pound New Zealand dollar, counter trend trade. Counter trend trade, okay, which can fall within these areas or these lows. First of all, the target the daily moving averages, fall back with the daily moving averages. So 1 hour time frame, similar situation. Okay, let me remove these arrows. Similar situation, all right, or these lows. Okay, the place you are watching is this, and the short-term trade gonna be that. Okay, and as I said, the trend is appearing over there. The trend is trying to appear over there. They're within these places. So target that short-term trade first, and if it goes aggressively lower, okay, then the target gonna be much lower places. Okay, and if we don't get that, as I said, we are still they still can push for another leg higher. You still can push for another leg higher back to that top. Yeah, then again we're gonna start looking for the counter trend move from that high. Right, from that high, I'm gonna start looking for counter trend move in these areas, or go all the way back to these lows. Actually, you are looking for counter trend. You are looking for counter trend trades. Start looking for counter trend trade on pound against these two currencies, against Australian dollar and against the New Zealand dollar. Okay, so pound CAD is also similar. You looking to counter them, but it has also gone higher. I wasn't bullish on this chart, all right, but other people are bullish in our room, so they were bullish. They were buying the pound against the CAD. But similar, you are looking to counter these three currencies. Okay, but looking to counter them from highs, from the top. Okay, especially this currency. Okay, so it's struggling. I wouldn't suggest you to. Yeah, obviously this is gonna also fall. All right, so this is also gonna fall if the other two pound fall against the Australian and New Zealand dollar. This is also gonna fall. All right, so I wouldn't suggest you to chase that trade. Okay, just ignore that and let the price test that highs, and once they test those highs, then you are looking to counter them. Okay, like these trades. Right? And if they keep falling, much lower than you are looking. So like that, all right? So like that, rather than, you know, doing anything at the current price. Yes, so there you are looking to bounce back, all right? These charts to bounce back. They're testing the lows. You're looking these to bounce back, Australian dollar to bounce back and give us a bigger weekly leg higher. All right, so this leg, and if that leg keeps rising, then all the way back to that high. All right, that's a weekly leg, and we'll see if that weekly legs come out. But right now, we still let me check the New Zealand dollar, what that chart is doing right now. Actually, the way to trade on these two charts is that you need to watch the I mean, you need to watch which one is moving first, and then you need to follow the other. Right? You need to watch the first. Let's suppose the New Zealand dollar, you know, is holding right now these moving averages. Okay, right now we can see there the New Zealand dollar is holding for the downside. Okay, the way to trade is this. There we can see that this chart is holding, and this trade is appearing over there. Okay, the short-term trade is appearing over there. But this similar setup is there. Okay, this similar setup is this is also holding. All right, this is also holding, and let me remove that. Okay, so there you're paying attention, this chart. All right, so if this breaks down, okay, and has that low, yeah, it will create actually a sell opportunity here at this area. Right, the New Zealand dollar fall against the CAD and test that low. Okay, and this chart is not testing that low, means that you are looking to catch this opportunity. You're looking to sell here, or if price keep testing this area and this chart keeps falling, then you are looking to sell and looking to catch that trade back to this area, putting your stop loss behind that. Yeah, price to hold those moving averages, do not fall. This is actually leading us, telling us that the Australian dollar is also going to fall against the CAD for more downside. Okay, hope that you understand that. Now you keep watching this chart. If New Zealand dollar keep you know falling, and this chart, the Aussie carries keep flirting these areas, do not fall, keep flirting these areas, these highs, then you are watching these areas and looking for this to drag lower. The lower the Kiwi CAD goes against the lower the Kiwi CAD goes, okay, the longer, I mean, the higher the chance is going to be that the Aussie dollar also going to fall against the CAD. Okay, these two pairs are highly correlated to each other. If one moves, then it gives you a clue that the others is going to move into the same direction as well. So you can follow the others, which is behind, which is lagging. All right. For bigger time frame, we're gonna look for the weekly move to the upside. Okay, so I think we will see in the next weekly market outlook if that weekly chart is still setting up for a buy opportunity. But right now, this is the opportunity, okay? And this is the opportunity you are looking for on Aussie CAD. So Aussie to fall against the yeah. So make sure you understand that you are looking to sell them at the bottom. If they keep falling, then you are holding. If they are not keep falling, then get out, okay? And there is a good chance that for a big reversal on daily time frame. All right, so that trade is just for a short term. So same goes with the Kiwi CAD, right? And yeah, this is what you are looking on Kiwi CAD. That's the bottom, and go back up for one and a half first. Okay, within these areas, 1.5 first. These areas, these places, just based on the support. 1.5 first. If that keeps rising, then test that high or keep pushing more higher all the way up to that high. Remember, the trade which I was showing you on the Australian dollar against the dollar and New Zealand dollar against the dollar, if those trades are going to happen, all right, then obviously we're going to have that big daily move all the way back to that high. All right. So again, intervention gonna help us. So ignore this. All right. So I have already shown you these two charts. I mean, not shown you, but the trade is similar, like pound Australian dollar and pound New Zealand dollar. Okay, because the same trade has happened here. Remember when I have shown you buy on the pound Australian dollar, a big buy, and pound New Zealand dollar. So same big buy happened here, right? Price was just keep rising and rising, and all these charts, updates were showing that the big run up was just coming over there. Okay, so similarly, I have shown you a counter trend trades on those two charts, pound Australian dollar and pound New Zealand dollar. So similarly, the risk is also same. Okay, so is there a risk for these to crash for upside and continue to keep pushing more higher? Yes, of course. And the policy divergence is still there, appearing over there between the ECB and the Reserve Bank of New Zealand. ECB is still looking to raise the interest rate, while the Reserve Bank of not looking to reverse its policy, looking to cut. They have already hinted that they may cut the rate if their economy is going to slow down sharply. Okay, so same counter trend trade, and daily target's going to be lows like pound Australian dollar and pound New Zealand dollar. So rather than chasing that 1 hour time frame flag, better to let the price test those tops. Okay, and you're looking, these short-term trades first, and if they fall, and if price fall, then fall much, lower within these daily moving averages. Yeah, counter trend trade, go all the way back to these areas. These are counter trend trades, right? First, you're looking for short-term back within these areas, right? So that daily high to hold. Stop going to be behind these tops, right? 1.5, and if growing, then keep growing all the way to the lows. Uzi Chief is also similar. I would suggest you to ignore, because yeah, counter trend move. Yeah, so going against the trend here is not making sense, because the franc is very strong. You only can sell for the downside here with the continuation trend like that, for the downside like that, like I have shown you on the Chief Yen. Yeah, buying opportunity short term. So similarly, you can only sell them. The trend is extremely strong to the downside. Australian dollar is extremely struggling. Australian dollar against the franc. So you only can sell. So I would suggest you to just ignore these charts. They're at the bottom. If intervention happens, yeah, they can move sharply. So wouldn't suggest you to do anything on these charts. Yeah, finally they are testing those lows. We're expecting them to keep dragging lower. They're just keep dragging lower from downside. So yeah, so wouldn't suggest you to do anything. If they change during the week or update is needed, I'll try my best to update. Okay, but yes, they can struggle against the franc. They can keep, or just ignore them, guys. All right. So there is the currency which you need to keep watching closely. So you need to understand the logic behind why you need to watch that currency closely. Okay, again, inflation is very important, chart guys. When you need to understand the inflation dynamics, and if you understand the inflation, you understand the central bank's policy, and if you understand the central bank's policy, then you will understand their communication. Okay, when you understand their communication, you will understand the market movements into the market. This is the inflation chart, right? And this is the Chinese inflation chart. Chinese inflation fallen below zero. This is yeah, where we were in the March 2020. Yes, not March 2020, but the Chinese inflation fallen after the Western inflation has fallen back in March 2020, there within these areas, in that time when the Chinese inflation was extremely high. It's not extremely high at 540, yeah, but now there we can see it's fallen again back to November lows. Yeah, you only can push this inflation higher by easing the monetary policy, or in simple terms, you only can push this inflation back up by creating more Chinese yuan, by giving those Chinese yuan to the people, and can ask people to go and invest and spend those monies. Yeah. So you only can, push that inflation higher by, pushing up the Chinese people, buying power. If the Chinese people can have more money into their pocket, they're gonna go and spend, and that will cause the inflation to go higher. Okay, and if that happens, okay, if Chinese People Bank of China create more Chinese yuan, then what's gonna happen with their currency? Right, their currency gonna keep falling, dollar gonna keep rising, right? And that's the only logical reason behind that. The dollar is just keep rising is the Chinese yuan. Their policy divergence, all right? That is having higher interest rate policy and saying that they're going to hold interest rate, while on the other side, Chinese are saying that they are easing the policy, creating more Chinese yuan, which is causing both banks a different direction. Both banks are going into a different direction. One is creating money, and the one is just removing money from the system and causing the dollar to just keep rising against the Chinese yuan. This is the reason behind this trend to just keep pushing more higher. Okay, so right now they are not they are People Bank of China, they are worried about the spiral weaknesses in their currency. They are worried that the currency may get extremely weaker if they're not gonna intervene. So they are letting their currency get weaker, but by intervening, right? So there is a risk. There is a risk for both direction, guys. There is a risk for this to move extremely aggressively in both ways. Okay, there like this. This kind of risk is there. This kind of risk, aggressive move like this. It can do like that, very very aggressive, and continue to keep pushing more higher. Or if we're gonna have intervention, if they are going to intervene and sell the dollars, then again can fall like this. So what I'm saying, actually, I'm saying that it is at a place where we can see intervention. Okay, intervention can happen. So if intervention is not going to happen, and People Bank of Canada are going to let the market forces to decide the exchange rate, then it can break up for very very aggressive problems. What is the price action we are having in last couple of days? The price action is saying that this is the intervention. Okay, intervention, and it can happen, right? So I mean, we can see drop tonight. If drop is not going to happen, again going to push more higher, again intervention area, again they're going to start intervening. So I would suggest you to not trade on this, all right? Don't sell the dollar against the Chinese yuan, all right? But keep eyes on this chart. This chart will tell you that what can happen on the other chart. If dollar is going to fall very, very aggressively, okay, against the Chinese yuan by having the intervention from the People Bank of China, then you are buying the Australian dollar, buying the New Zealand dollar. I have shown you the setup on those charts. You're buying those currencies. All right, they're gonna be opportunity. You can even sell that when intervention is gonna be over there, but you need to understand that, and the price action. The price action is already here. Yeah, you need to see something like that kind of sell off. But that kind of sell off is just coming. You just need to follow that. But that kind of sell off only gonna come when there's gonna be intervention. All right. So, Chief. Euro against the Chief, simply a buy opportunity. Okay, slow moving pair, need to keep close eyes there. It's testing the lows again. All right, slow moving, and that's what you are looking. Okay, if you can hold trade for that much longer period of time, because the slow moving pair can take a lot of time to go higher, then you are looking that trade. All right, so there is the opportunities. Okay, the opportunities are there on the US indices. So I'm gonna slightly go faster now on indices so that we can finish it. We are okay. This is what you are looking, simply, guys. This trade, okay, so short-term trade is going to be over there on lower time frame. I'm talking about this daily wave. All right, this trade and this trade to go all the way back to that high. Right? I have already shown these in my video analysis on the Nasdaq and Nasdaq, but this is the move you are looking for. This is bigger wave. Okay, bigger wave you are looking for. So if I'm gonna look at the lower time frame, the opportunity is going to be on the lower time frame. You are simply looking to counter every time and the price is falling, right? Looking to buy, and let me remove that. You're actually looking for buys every time and these are falling. All right, looking for short-term trade first, and once they are pushing aggressively higher, then you are looking them to continue. All right, breakout and go higher and all the all-time highs, okay, or fall another leg lower and then continue to keep rising all-time highs. Okay, if something happens and they crash, we'll see, but right now you are just looking to buy the dip. Buy the dip buy the dip mentality. There is the box rectangle. All right, looking for buy opportunities. It has already bounced off. Yesterday was a buy opportunity over there when it was falling. All right, so if you have managed to get in, then great. If not, then hope for another leg lower, okay, and then looking for these to continue to keep pushing more higher. Otherwise, during the New York session, you are paying attention closely on these, 15-minute corrections. All right, so these 15-minute corrections, another 15-minute correction to appear over there, and price to break up. If it doesn't break up, then fall, test those lows, and then go higher. Okay, so same goes with the Nasdaq 100 index. The Nasdaq 100 index is also doing this similar. So the trade is same. Okay, I was showing this trade in my video analysis, the daily breakup, right? So we are having that lag is appearing over there from those lows, and the reason why we are still expecting this to break up, because the European equities are still doing really good. Yeah, they are still pushing higher and doing really well, specifically having the higher rates, higher yields. So it's suggesting that we still may see more strength. The more strength on the US indices. US indices also can push more higher. So it has already bounced off from the lows, and seems that the trend is still trying to push more higher. And if I'm gonna go to the 1 hour time frame and I'm gonna look at there, so right now the strength is appearing over there in case if price fall. All right, so paying attention at these areas for buy opportunities within these areas. Okay, and during the New York session, you are simply looking for that trend which is just appearing over there to stay intact, and another 15-minute correction to appear over there, and looking for a buy opportunity over there, guys. 5-minute to 15-minute time frame, looking to buy opportunity for short term first. All right, if 5-minute correction comes over there like that, within the price comes back within the moving averages, then you're looking at this, right? Moving averages to hold and continue. All right, and continue to keep rising. All right, or otherwise, if you don't want to chase that trend, wait it and let the price test those lows. All right, these areas, and then you are looking to buy the dip over there within those areas, and the daily, where the daily moving averages, looking to buy there within these areas. Okay, and this daily lag higher. Makes sense? Yeah, this setup is almost the same on these three indices. Same setup, same daily setup on these three daily indices. Okay, it has S&P 500, Nasdaq 100 index, and US 30, the daily move, that daily lag. All right, so same on this. It tests that low, then you are looking to buy. Otherwise, this is the structure. Continue or fall back, test these lows, and then go higher. Stay by the dip, mentality on US indices. All right, so it fall and test that low. Otherwise, 5-minute to 15-minute time frame during the New York session, and we may get a break up. Okay, if break up, then go all the way high. This, let me pull out some boxes. Okay, this is actually, this is what we are looking, price to go back within those. If it fall, then again test that low and then go back up. All right. So, or if I'm gonna make it simple for you, right, then these daily moving averages to hold. Okay, these lows to hold and break the daily correction for upside. Right. So on small caps, small caps are gone in a big sideways. We were expecting last time rise from them. I mean, to go higher, right? So I'm looking this, okay, and in case we're going to see some decent strength, then the decent strength is going to be that all right. So if we are going to see all-time highs on US indices, then this is big lagging opportunity, US, Russell 2000 is extremely lagging between the other US indices. Okay, so if I'm gonna pull out and look at the Nasdaq 100 index, small caps are extremely struggling just because of the higher interest rates, but creating a decent longer term opportunity. Right there we can see that large caps are testing highs, about to test those highs there, or there we can see we are not having enough gap, okay, but we are having a lot of gap over there, right? So small caps are showing huge potential for upside. So right now we are not having, I mean, they are, the reason why they're not rising is the higher rates, guys, and you have to be, just look for these lows and look for, short-term opportunities like this first. Let me remove that. Right, look for this opportunity within those daily lows. If they test those daily lows, okay, this short-term opportunity first, and if it grows aggressively, then go all the way back to that high, and for longer term, go much higher. Okay, US indices are at the highs. Okay, they can push higher for another leg. Okay, this simply that leg. All right, on US indices, just simply that leg. All right, that leg. That's the all-time high. That leg. So Frank 40 already bounced off, though you don't have, but on these two, you still can chase the buy opportunity. All right, 100 index, UK 100 index, still offering a good buy opportunity. All right, so you're paying attention at these areas. Okay, looking for that daily move to go all the way back to that high. UK 100X is struggling more than the US indices, okay, but offering an opportunity, buy opportunity. So Nikkei index also offering a buy opportunity over there, right? So it has already, moved away from the lows, guys, so wouldn't suggest you to chase that. Okay, in case if it falls back, then you're looking this move, right? Like that. So no continuation trade on there. So yes, this is also offering a good opportunity. All right, same trade is same, guys. I'm just showing same trade everywhere across the market. A risk on move. I'm showing a risk on move everywhere. Same trade is just showing everywhere. So for that risk on move, dollar needs to drop. All right, dollar needs to drop. $1 needs drop. You're gonna see all these charts gonna go back up, right? That trade. So goals, yeah, same on gold, guys. Dollar needs to drop and gold to go. This is a bigger picture on gold, right? But on lower time frame, you are looking this to only gold is leading at the moment, right? Against the dollar pairs, gold is rising against the dollar pairs. Against the dollar, not dollar pairs. Gold is rising against the dollar, okay, suggesting that we are going to see some weaknesses on the dollar in coming days. All right, so that trade you are looking, if gold If gold visit these lows, still gonna be a buy opportunity from these lows. All right, these lows. That's the backup plan. So I first usually I talk about the backup plan first, then I talk about the opportunity. Right? So these areas you're paying attention simply or buy on the gold. Yeah, remember, I have shown you dollar to go down. If dollar goes down, right, then you have to be bullish on gold and silver. Okay, so right now you are looking, the breakout has already happened. This daily wave has already broke out for upside. Right, so right now you're looking for this short-term move, okay, and that to continue to keep pushing higher all the way. I will ignore this silver, okay, but Bitcoin is testing. So we can talk about, I will talk about next time when we're gonna in the next weekly market outlook. All right, why we should stay bullish on the Bitcoin for longer term. But right now you are just simply looking for this place, okay, this price action area. And remember, there is a still chance that the Bitcoin can go all the way back to these lows, guys. So make sure you are not loading full on Bitcoin. All right, do not don't be too aggressive on the cryptocurrencies, as we can see that the slowdown is coming. You should expect crypto to rise for longer term. Then, when policy is reversing, all right, when central banks are cutting the interest rate, then you are looking to load for longer term for big. Okay, they are not cutting at the moment, except the China is cutting the interest rate. New Zealand also hinting, yeah. And the big player going to be the Fed. Okay, we still can see one more leg lower. So this is, the arrows are showing you, right? Arrows are showing. So oil, BNB going to be a buy opportunity too, guys. BNB is a buy opportunity. Yeah, we are already up, looking for buy on the BNB. Again, higher rates are causing the BNB to go down. All right, this is the trade you are looking. This is a longer term opportunity, not a short term opportunity. Yeah, so the breakout, okay, this correction to breakout and continue. Right, so if it goes lower, its breakdown goes lower, so load up more, look for buy more. Right, this is what you are looking. So yes, this is the natural oil looking next leg lower. Okay, we got some breakout on this, some sell-off came over there, breaking down. All right, this flat formation. Right, so need to remove that. This is what you are watching, breakdown or test that top and then drop. That's the oil. All right, natural gas just already bounced off. If you have seen my previous video analysis, then you are again keep buying every time, and it has already bounced off. You shouldn't chase it now. All right, the trade is simply gone, but just keep waiting within these areas. Okay, these areas are the buying place in case if price break and fall below these areas. Okay, so stay bullish, buy within the, I don't think so price going to test because winter is coming. Yeah, so highly likely price going to keep reversing within these areas. So you are just simply paying attention at 240, 243, yeah, 245 within these areas, and every time it's coming, just look for short-term buy opportunities. Yeah, it has already reversed, guys, so you can't don't chase that. It can fall very, very aggressively again, because when you are fighting with the inflation, you don't want commodities to go higher. You want commodities to go down. Right? Central banks want commodities to go down. All right, so when you are, again, I'm going to give you a tip over there. When you are selling the oil, just watch what's happening with the wheat. Wheat is going to give you a clue that where the oil is going. Yeah, so right now we are having wheat is falling. Wheat is falling. Wheat weekly leg is lower. Your next leg, this next leg is due. Okay, this one bearish leg has already happened, and the next leg is due on the oil. This move has to appear over there on oil. So that's why we are Wheat is just simply leading you that what is going to happen with the oil. Okay, so copper, we are expecting copper to fall for a big time. Copper still can push higher for another leg all the way back to that high, but we're looking for that to go down. Okay, so there are some charts which you need to consider if you are trading on stock, right? So Apple gonna be a good buy opportunity, guys, at this low, that next leg higher, right? This is a good buy opportunity all the way back to that high. Make sure you trade on these individual stocks properly with proper risk reward, with proper, risk. Okay, we are looking that daily lag, Apple to go and test that daily lag. You can even trade on them during the day. Okay, so same trade, Microsoft, when we were expecting them to go higher. Microsoft, let me look at if I do have MSFT. Let's just find that chart. If I have posted those charts. MSFT. We have done well, right? Microsoft is pushing higher, going, has already tested all-time high, right? And did well. So you are again looking for that daily to hold, that daily trend to hold. Okay, it is already holding, and you're looking, a short-term trade first. Okay, and then big daily wave to go higher all the way back to that high. So same trade is on. Nvidia is so strong, all right? Nvidia actually is holding the rest of the US stock, all right? Lifting up Nasdaq 100 index, lifting up S&P 500, lifting up, US 30. So Nvidia is lifting everything up. So as long as Nvidia is keep pushing higher, okay, so your Nasdaq 100 index will stay, Nasdaq, daily wave will stay intact. Okay, it has already broke out that daily correction higher. All right, so next leg broke out, but that next leg hasn't appeared over there on Nasdaq 100 index yet. So you're chasing that trade. AMD also going to be a bullish opportunity. So AMD also did well. We were expecting AMD to rise from these areas. So AMD also went higher. I didn't post the Nvidia. I should have posted the Nvidia because Nvidia was also a buy opportunity. So Nvidia was did extremely well than these AMD. Actually we are having chip war, guys, between the US and China. They don't want to share their chips with each other and putting restrictions on them, and that's the reason Taiwan is is between them. So US is just decoupling from China, and Nvidia is also rising because of their chip is so advanced, and AI is being used in AI, and that's causing the Nvidia to go higher. But if Nvidia keeps pushing more higher, also these chips gonna do well too. All right. So you're looking for this daily move to continue to keep pushing more higher. Okay, and it's still got a room to run. If you trade on these stocks, this is what you're looking for. Again, best case scenario, all the way go to higher. Google is also doing well, right? And this move, okay, this move, there is a daily correction. Okay, the daily correction is happening here. Bottom of that daily correction, you're looking for buy in there. Amazon also, right? So Amazon also a same trade. Looking for this to go all-time high, but looking to buy within these areas at these lows, or let's just put it over there, these areas, if it has that. Meta also buy, okay, these daily corrections to break up and continue to keep pushing more higher. right? These highs. Tesla also a good buy opportunity, guys. You trade on them, then they are offering a good buy the dip opportunity. Okay, first target gonna be that, and the trade and the wave is this. Okay, you're holding, looking these to hold those moving averages. Netflix also gonna be a buy, right? So remember, you're only gonna have next leg higher on the US indices then if these big names goes higher. If these big names doesn't go higher, you're not gonna have higher leg on the S&P 500 and other stocks. Okay, if Apple doesn't go higher, you're gonna have higher lag on Nasdaq 100x or S&P 500. So these big names needs to go higher. Okay, so thank you very much. Enough for today. Hopefully you have enjoyed or learned something. Some big waves are setting up over there on these individual stocks. Remember, dollar needs to drop for all these charts to go higher. Simply, DXY needs to bang lower. Okay, if the DXY doesn't go lower, the leg which I'm showing here, if that doesn't happen, okay, you're not gonna get those legs which I'm showing on stocks and equities and on other risk on currencies. So watching DXY very, very closely and breakdown, and possibly we're gonna have those legs. Okay, so thank you very much. Thanks for support, Carlo. And we'll see you back again in another weekly market outlook. Until I'll try my best to keep you updating. You know, keep eyes here. I'll keep updating. You know, if I'll see video setup is coming over there, I'll post here and on TradingView as well. Yeah. Thank you everybody for coming. Thanks.